So we focused on all of those contrasting dynamics when it comes to the oil price this morning. Let's roll on and show you the European futures picture. And actually, through the last hour, this has been turning more and more positive as we've been dealing with the news flow coming through from some European corporates. We've had interviews with ASML, interviews with SAP, both of those businesses, reasons to be positive. Certainly the SAP story, increasing guidance, blowing through the estimates over at ASML. So plenty to talk about when it comes to the European corporate story. We will see how that plays into the start of trade this morning. The FTSE 100 then up by 0.2% this morning, 7,500. There we are on the FTSE 100. The Swiss franc gaining, the dollar a little on the back foot, the euro then given space, and the pound given space in this risk rally that we're seeing to move a little bit higher this morning. Yields coming down, though, in contrast to the Japanese story. Yields coming down is the story across Europe today, it would seem. So Spain, France, Italy, Germany, we're seeing those yields coming down, and gilts opening and moving in lockstep, if you like, with that trend. So the 30-year gilt yield down by 2.9 basis points, 3 basis points. And of course, the story today that we'll watch when it comes to bond markets here in Europe is those PMIs. We get those for Germany and for France this hour, and then onto the Eurozone and the UK numbers a little bit later on today. I mentioned that we'd seen that triple R cut coming through from China, and that was pushing the iron ore price up a little. So we'll watch whether basic resources get a kick from that. But this is the broader commodities picture with that Brent crude move a little higher and gas prices just a little firmer this morning. Let's move on then to the sector picture. Really interested to see how basic resources are responding to that triple R cut over in China. Also interested to see how technology responds to the earnings story. There we go. Basic resources up by 2.75%. So real strength coming through there, perhaps to do with the China dynamic. Other things perhaps in the mix as well there. But that's certainly one thing that your mind goes to when you think of a triple R cut in China. Technology stocks up by 0.75%. So broadly speaking, we are seeing a lot of positivity across European stocks, up by around 0.5%, 0.6% higher on the FTSE 100. And in terms of a couple of sectors in negative territory, personal consumer goods and insurance, both a little bit lackluster. Now, we don't have an opening share price on ASML, so when we're looking at these technology shares, share price moves, we bear in mind that some of those big movers, where we expect to see big moves, perhaps to the upside, we haven't got an opening price yet. So with that in mind, let's focus in on the tech sector. ASML orders more than tripled last quarter from the previous 3 months. This as demand for its most advanced machines soared. Let's talk about some of these technology themes and the earnings stories here in Europe this morning. Bloomberg's Chloe Mele joins us. Chloe, good morning to you. What do ASML's results then tell us about the health of the semiconductor industry?
Well, ASML really is a bellwether for the health of the semiconductor industry. And so given the numbers that we've got today, it seems like the industry is on the road to recovery after a year marked by slow demand, by geopolitical tensions. Their orders soared in the fourth quarter, beating estimates by a significant margin. A lot of that was from China, because Chinese chip makers were really rushing to get those ASML machines before export restrictions came into effect. Those restrictions are now coming into effect this month, so that means that the Chinese market is a bit more of an uncertainty. ASML said that about 15% of its sales, its China sales, would be affected by the export measures this year. But ASML is in transition in 2024, and it's kind of paving the way for a strong 2025.
Right, yeah, a really interesting conversation with the CEO, Peter Vennig, and we have an opening share price on ASML. Just trying to get to what that means for the share price this morning. It's certainly surging this morning. We'll try and get that up for you. There we go. ASML up by 7% in this morning's trading session. So record quarterly order intake, clearly paying benefits for the business. Incredible versus estimates, really much stronger than had been expected. They see positive signs in the semiconductor industry, and they think that saying that the semiconductor industry has now bottomed, as you were saying. Really interesting stories there. Let's move on to SAP, because another big tech name and another one that we have a share price open for. So SAP, the share price there also surging and currently up pretty strongly this morning, jumped 7% at the start of trade. Now, what opportunities is SAP really trying to tap into with this restructuring? Because it isn't just job losses. There might be, sadly for those involved, some job losses, but there'll also be hiring and some retraining, he was clear to point out.
Yes, so SAP is Europe's biggest software company, and it is betting it all on artificial intelligence and really trying to incorporate those AI tools into almost all of its product offerings. So there is about 8,000 jobs affected by this restructuring as it tries to kind of capture those strategic growth opportunities that are all centered around AI. That has been building up for a few years. It transitioned from a focus on its enterprise business towards cloud subscriptions. It had a partnership announced in May with Google's cloud computing unit as a result. And in terms of its earnings, its revenue beat expectations, but its operating profit came in just slightly below estimates today.
Okay, but the share price no doubt responding positively to some of those restructuring plans and some areas where they outperformed. What about Netflix then? We had a strong fourth quarter there, another company beating estimates today, and that's in terms of the subscription numbers and beating by quite a substantial margin.
Yes, so Netflix had an explosion in subscriber numbers in the fourth quarter. Whether that momentum will keep going into 2024 remains to be seen. Even if there is a bit of a slowdown, that will not necessarily affect revenue because of price increases that might happen. There's also a lot of growth opportunities for Netflix here, the growth of its ad tier subscriptions, and also its move into live events. So it announced yesterday a partnership with World Wrestling Entertainment to broadcast live wrestling, and seems to want to capitalize on those on the advertising revenue that you get with live sports. It's also made some moves into the gaming space over the last year. So the company is changing shape, and that's something that investors and analysts will keep a close eye on.
Okay, thanks very much for joining us. Chloe Mele, Bloomberg Chloe Mele, joining us here in London with an update on some of those tech themes this morning. And certainly the evidence of those tech earnings very clear on European markets this morning. We have real strength coming through in the stocks we've been mentioning. As you can see, SAP and ASML both up by more than 6% at this stage. The stock 600 up by 0.8%, and the technology sector as a whole up by 3.6%. So it isn't just those heavyweights, and heavyweights they are, that are lifting things, but we also have ASM International and some of the other broader tech space rallying in response to what we see from ASML and SAP. Let's talk about macro policy, though, now. The macro themes so far this week have been dominated by ongoing thinking about the Fed, but also a shift in thinking perhaps around the BOJ. Let's talk about what we've still yet to hear from the ECB. Pooja Kumar joins us, senior European and UK rate strategist at TD Securities. A pleasure to have you on set with me here this morning. Pooja, very nice to have you with me. So we're looking ahead to the ECB. Tell me, what are you excited about the ECB, Pooja? Because it does seem as if the focus is on the summer and not really on January. So what should we be watching this month?
I hope they define what they call summer as. Yes, so I think ECB does not have much to say. We've heard from central banks so much over the last week. And I think when it comes to ECB, they have been pretty much straightforward on what they're looking for. They have seen weakness in data, and I'm sure today's contractory PMIs are going to support the fact that Europe is slowing down. But they have told us that they're looking at wage data. They'll have that by March, so the earliest they can hike is April. That also if things go worse. But key for markets is a June rate cut. And I think that's what we are looking for. And I think when it comes to ECB, they like to give us time dated when it comes to cuts, hikes. So I think that's their style of doing it. So I don't think that there'll be much in terms of deliverables when it comes to the policy meeting itself. I think it's hard for ECB right now to push back so much, given the fact that we are seeing very strong deterioration in data. We got the bank lending report yesterday, and we have seen contraction in lending volumes the entire 2020. So I think it's hard for markets not to price in cuts as soon as April.
That's the evidence of the transmission mechanism, is it? The fact that we're seeing not only, I mean, last year certainly the story was reduced lending, also reduced demand for that lending, and that's as you would expect to see when rates have risen so far so fast.
No, exactly. I think in Europe it has worked much more easily versus Fed, where we are not seeing that kind of slowing down in demand. So I think it's hard for markets to actually think at this stage that ECB can sound overly hawkish when data is not that supportive for them.
And tell me, I was just going to ask you about the wages story, because you mentioned that wages story earlier. So the earliest they could hike, if they want to find out more about the wages, is April, you said, but June is what you're expecting. Tell us the significance of that wage data, because inflation has been coming down quite substantially in the Eurozone. It's patchy, different geographies, but the overall number really approaching target versus where we've been. So how concerned should they be about the wage data?
I think they have been really concerned. Even if you look at the PMI reports from, say, France, what we are actually seeing is that even though demand is decreasing, they are actually seeing an increase in wage expectations. And in Europe, everything is lagged. It's not, there's a lag between increase in inflation. Inflation may be 10% last year, but we did not see that exact rise in terms of wages. And that is something that's going to filter in right now. And I think one more risk that ECB has, and also all central banks, is that from a real wage perspective, we are much richer this year versus last year. And how does that actually feed into the core inflation?
Yes.
I think they have seen a lot of evidence. I think they just need the last chapter of the book, whether the wage also stabilizes. And I think they should get that by March.
Yeah, but really interesting questions then around wages and how much they play into a spiral, wage price spiral or not. So really interesting to talk about that. Pooja, thank you. Stay with us. Pooja Kumar stays with us, Senior European and UK Rate Strategist at TD Securities. We'll be back with her shortly. Coming up on the programme, your movers are next, including ASML, the chip equipment maker, gaining after tripling its fourth quarter orders and smashing through estimates. We'll get more details shortly. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Welcome back. This is Markets Today. 13 minutes into a European trading day that is seeing some strength amongst the technology names, also amongst basic resource stocks. Let's get a rundown of some of these movers this morning. Joe Easton joins us once again. Joe.
So we're getting ASML jumping around 7% over in Amsterdam. A big move for that company. It's chip machinery making, and it's reported better than expected orders overnight. According to one analyst I read, the orders beating expectations by as much as 200%. And as such, we're seeing a bit of a read across over in some of the other names, including BE Semi. It's all the machinery makers. Some uncertainty around Chinese demand, but that is not coming up in that report today. But it's a tale of two different chip sectors, because the actual chip makers are lower following Texas Instruments report in the US yesterday. A drop in orders related to industrials and also autos as well. So Infineon, ST Micro, all those shares coming down at the moment. Chips are getting fried. I thought I'd throw that one in there. That's not the worst one I've done. Siemens Energy, this one gaining 11%, better than expected orders for the renewable energy firm. It fell off a cliff last year, but it is doing better than expected now. Worries about a capital raise are easing, according to analysts. So that's one of the best performers on the market we've got today. Then we'll flip over and look at a couple of other earnings out today. Firstly, SAP, alongside their results, they have announced those massive job cuts. They employ around 100,000 people, and it's a big chunk of that. And that stock is gaining 8%, potentially on a boost to some of their profits. JD Wetherspoon, now that looked pretty strong to me. They've released an unscheduled trading update, but we're seeing some weakness. That stock has done very recently, so potentially easing some of those expectations for spoons. But take a look at Revolution Bars. We all remember Rev Bars from our uni days. Down 30% on a profit warning, saying that they're suffering from dry January. That is hitting them, according to the company today. So spirits are not very high at Revolution Bars at the moment. EasyJet, that one gaining 6%. We had in stocks to watch. Orders holding up in terms of their bookings for the summer period, and also the winter doing pretty well as well. That stock remains very cheap, coming up a bit now. That one up 6% or 5% now here in London. Finally, we're going to take a look at miners. Now, this is an interesting one. News from Politico that the EU is potentially considering banning some imports of Russian aluminium, and we're seeing aluminium prices jumping around 3% in the commodities markets at the moment. Some of the biggest companies exposed to that, Anglo-American, Glencore, Anto, all of those shares are rising today. It's a green area of the market. Miners getting boosted this morning.
Yeah, absolutely. And that triple R cut from China perhaps helping also. Joe, thank you very much. Joe Easton from our equities team with the latest on some of the big movers this morning, from tech to miners and beyond. Let's go to some of the breaking news we're just getting this morning from the French economy. A first glance at the January PMI numbers. So an assessment of the manufacturing and services weakness. And it is weakness. Even though the manufacturing number has come in a little ahead of estimates, it's still down at 43, so well below 50. So 43.2 on manufacturing. That is better than the estimate of 42.5, but as I say, still very much in contractionary territory. And then the services number is also contracting and has come in weaker than estimates, and so overall the composite number is at 44.2, and the estimate there was 45.1. So weakness overall then in the French economic story, as indicated by these PMIs. Let's get back to Pooja Kumar, senior European and UK rate strategist at TD Securities, and this sets us up for we've got German data this hour, and then we'll get the Eurozone data. I mean, this is a weak story really coming through from France, all still very much in contractionary territory. And even if manufacturing is bouncing along the bottom, services is certainly not rebounding at any degree. In fact, the opposite. I mean, this just illustrates again, I suppose, the weakness of the European data that you were referencing.
Exactly, and this has been going on since June. And France and Germany have been the biggest drags when it comes to European PMIs. I think what we are seeing is that in December, we did see easing of financial conditions. So you can see the overall sentiment surveys have improved, but the hard data is still lagging. But I think what ECB has very cleverly done is that they are basically saying that we are not looking at data right now, we are just looking at wages. So I think that's where I don't see this data changing tomorrow's reaction from ECB per se, though they are going to be really drilled on rate cuts.
Okay, let me pivot to the Bank of England. We've seen traders paring back their bets on rate cuts in the UK, partly as a result of that inflation number that came in a little hotter than had been expected. Did that change your view, Pooja?
I know, with respect to BOE, we still think that all the central banks will be synchronized when it comes to rate cuts. It's all going to start in H2. I think the key for focus for us is what does the new election, the budget, the remit brings to us, because that will make BOE's job much harder because they have done a lot to actually get inflation to more normal levels. But I think where we are thinking about how the economy is growing as well as from the base effect perspective, inflation will be in the below 3% target after Q2. And I think that's where you will see that BOE will try to actually cut rates. And from May, June onwards, we are expecting all central banks to react in a similar way.
Okay, but waiting then for the budget, is that the key?
I think that will be key.
I saw some research from Bloomberg Economics this morning asking, can Hunt cut taxes and not delay rate cuts from the Bank of England? Because obviously politically, Chancellor Hunt wants to cut taxes. We've heard that message pretty loudly, but the concern from a monetary policy perspective is that that might delay cuts to rates. What's your expectation about how those two link up, the fiscal and the monetary?
I think they are very closely linked, even though they say that they're not linked. And I think same is going to be for U.S. elections, right? We are going to come with more stimulus. I think it makes the work for all central banks harder, but I think for them it will be always price stability. But I think right now what we are seeing is BOE is actually seeing enough evidence also of their policy working. Like, I know inflation was above market expectation, but it was still below what BOE had penciled in November. We saw a big drop in retail sales. Wage inflation also saw a drop. So I think things are working out. They will try to keep policies different, but I think if we do get that stimulus, what happens is that BOE will be less reactive and more proactive.
Pooja, thank you so much. Pooja Kumar, Senior European and UK Rate Strategist at TD Securities. Coming up, more from our conversation with the CEO of SAP. Shares of the European software giant soaring this morning. This is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Or other authorities.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
This is Markets Today, 23 minutes into your European trading day. Strength in the mining sector and in particular technology. Let's go to the tech theme. SAP shares jumped as Europe's biggest software company, SAP, posted fourth quarter earnings beating analyst estimates. The CEO, Christian Klein, spoke to us about the company's investments in AI.
We are investing in AI, over $1 billion for the next 2 years, while, of course, we're also applying AI internally. So we will try for higher automation of activities. So it's all about reskilling and, of course, also, making sure that SAP on its own becomes more productive. So it's actually an adaptation of our workforce to the new reality and securing our future growth.
Okay, so it's about reskilling, about adapting the workforce, but will AI mean that you end up with fewer staff in the end? I understand in a year you might not, but in the end, is that where AI takes SAP and takes the global software workforce?
I mean, Anna, what we actually also posted today, you saw, we are increasing our guidance. We are very confident about the growth potential of SAP until 2025 and the years beyond. And so SAP will also further invest. So we actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top-line growth.
You've talked about the cloud business, the growth in the cloud business this morning. It does, an analyst seem to be suggesting, and you've said that it's still accelerating in 2024. Where are we in the underlying customer appetite story around cloud from SAP?
We just talked about ASML. It's about supply chain, more resilience. It's about also fighting inflation and also coming up with higher productivity. This is what business leaders talk about. And this is SAP. Actually, we are embedding AI everywhere. We drive automation. And it's also about sustainability with the Green Ledger and with the decarbonization. What we can also help our customers with this is spot on. This is what our customers need. So General Motors, ASML, all of these customers also now, betting on SAP to help them to achieve these business goals. And when you look at our total cloud backlog of over 44 billion, you see what is already in the books, which also shows how resilient SAP in the meantime is.
Last year, on the AI front, Christian, last year you partnered with Google. You invested in Aleph Alpha, in Anthropic, and in Cohere. Do you plan further AI investments this year?
Actually, we just announced a partnership with NVIDIA. NVIDIA is actually a great story. I mean, they, again, are our customers, and they just made a huge bet on our technology to also build more resilience into their supply chain, to better predict sales, to further automate other functions inside NVIDIA. That's a fantastic showcase. While we are also co-innovating together on AI to really build the most powerful AI platform for businesses. And so you're going to see further partnerships, but of course we are investing a lot to also further, go into organic innovation in the field of AI.
That was the SAP CEO, Christian Klein, speaking to us earlier today. The technology sector still by far and away the best performing sector this morning, up by 3.1%. And for the the Stock 600 Tech Index, this is the biggest one-day gain, intraday, of course, since last July. So certainly giving some size and scope to that. This is a sort of material trend to watch. Basic Resources also doing well, up by 1.8% on some of the regulatory changes being talked about that Joe Easton mentioned earlier, but also around that R cut from China. Perhaps that stimulates some demand over in China for Basic Resources. Coming up, we will be speaking exclusively to the head of European private equity at Investcorp. That is live from the EPEM Private Equity Conference in Cannes. Danny Berger will be back with us, breaking down private equity, private credit, and taking us through what we need to know about that increasingly front and center market. This is Bloomberg.
we've been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood, in my mind, how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
This is Markets Today. We're 30 minutes into the European trading day. Here are your top stories. ASML soars as fourth quarter orders triple and smash estimates. The chip equipment maker says it sees signs the sector is recovering. Also gaining this morning, SAP, Europe's largest software firm, lifting its guidance for 2025 as it plans an AI-driven workforce restructuring. Plus, Netflix surges, gaining 13 million new subscriptions in the fourth quarter, marking its biggest jump since the pandemic. Welcome back to the program, everybody. Half an hour then into a positive trading day. Let's get to the German PMI story. Just getting a first glimpse of the numbers for the month of January. And the manufacturing PMI number has come in stronger than expected. So just like we saw in France, actually, stronger than expected there, but still well into contractionary territory at 45.4. The services number, similar to the French story, also in contraction territory and actually weaker than estimates. So 47.6, weaker than the prior reading of 49.3 and the estimate, which was the same. So that leaves the composite a little bit under where we'd expected it to be, not hugely so, but certainly in contraction, 47.1 on the German composite PMI. So that's the macro story. It seems to be the earnings, the micro story, though, that's moving these stocks around this morning. And so let's get to a quick check on where we are across European markets. The Stock 600 up by 0.8%, the FTSE up by 0.5%, the CAC 40 up by 0.4%, and the DAX up by 1%. So we see some strength coming through in technology-related stories, and that plays well for the DAX. The FTSE getting a bit of a boost from some of those mining names, but that doesn't offset some of the weakness there. So the DAX really outperforming in this morning's session. That's where we are geographically. In terms of the sector breakdown, technology really is the big deal this morning. The technology sector is up by 3.2% this morning. That's better than the next best, which is 1.8% higher for basic resources. And of the 3.6 points we've added to the Stock 600 this morning, a large chunk of that, around 1.5 of those points, is coming through from the ASML and SAP story. So certainly tech really punching above its weight there. And you can see that tech and basic resources stand out as areas of positivity. Personal goods, though, one area of negativity, down around 0.1% this morning. Let's get to the private market themes that have been increasingly riding high in terms of the news agenda. Private credit managed assets are expected to reach $2.8 trillion by 2028. With that growth in mind, we're today reporting live from the EPEM Private Equity Conference in Cannes. Bloomberg's Danny Berger is there with a guest. Danny.
Hi, Anna. From private credit to private equity, I'm pleased to say that we are now joined by Investcorp's Gilbert Kamieniecki. He is the head of European PE at the firm. Gilbert, really wonderful to see you this morning in a cloudy but nonetheless beautiful Cannes. When it comes to these European markets, last week at Davos, we had so much pushback from ECB officials about this idea that we would be cutting anytime soon. They were really adamant they didn't want premature rate cuts. What does that mean for you? Are you preparing for a high-rate, low-growth environment?
Yeah, I think from my side, from private equity, and thank you, by the way, for having me. It's a pleasure, Danny. We need to get independent of this whole leverage game. I think that has been going on in the industry for quite a long time, actually. So a rate cut shouldn't be a massive change in strategy at all. And if anything, a lot of our portfolio companies have very low leverage, and it needs to come back to fundamentals. So fundamental growth, less focused on that financial engineering component that one could have observed in the industry in the past.
So you've been getting ready for it, but do you think there are a lot in your industry who aren't ready for this, who have been extending and pretending, and it's going to become clear their business models don't work if rates continue to be high?
Yeah, I'm not even sure if it's a question of getting ready. It's a question of what's in the existing portfolio. So I think what is very important to see is how existing portfolio companies have been levered in the past, and are there any risks around that? Because obviously with the interest rates going up already, the cost of leverage has become so much higher than it has done in the past. And what that means, you can sustain that for a period of time, but ultimately it will catch up. So it's a question of how many cash reserves are there with the portfolio companies and how long can it be sustained.
Well, I know I said this to you before, but I almost feel like everyone I talk to says, oh, we're not that levered, we're ready for this. How ready is the industry as a whole? I understand that you're set up to be okay, but what percentage of this industry would you say are going to have some difficulties this year if rates continue to be high?
I think we are acting mostly low middle market and middle market, and I think there historically actually leverage ratios have been quite low. But I think if you go into the larger cap space, I think that's going to be interesting to see, because there the financial engineering component, high leverage, cost of debt will play a bigger element to it. Hard to say what happens, but it will shake out, I believe, in the next 12, 18 months.
And in the meantime, it feels like we've been waiting for cuts. Deal activity has been really low. How difficult right now is it to exit and get the price you want?
I think there are different options nowadays available as well. So at the moment, actually, because deal activity is low, if you have a very strong performing business that is good growth, good characteristics, actually, I believe it's a great time to be out there, because you're one of few players that are having a business ready for exit in that environment. And a lot of funds have not deployed in the last year or 2 years. So particularly in Europe, you would have country-specific teams of maybe global funds. And in Germany, there are such teams, for example, where I'm from, where effectively they haven't deployed as much in a year or two. And if you're sitting in a country you have not deployed, actually, there is pressure to do just that. And I do think that will mean that if there is a good asset coming to market, actually, we have seen there's quite a lot of interest.
Gilbert, before taking over as head of Europe, you were head of tech, so we have to ask about tech. We also are in the middle of tech earnings. I know this is public markets, but for example, we saw notes from Wedbush saying that the only thing anyone cares about this earnings season is AI. That seems to be all anyone cares about in tech. But if you missed investing in OpenAI, if you missed investing in NVIDIA, the big players now, did you miss investing out in AI? Is there still value to be had elsewhere?
Yeah, I think absolutely. So I think there's a question of, am I investing in a pure play AI business? Then your question, I think, is very relevant. There's going to shake out. There's going to be very few players, and it's $1 billion plus valuations. So maybe not the place, at least for us, to be in, because we are control majority investor in private equity, low middle market. But I think what we can see, we can use AI for us as a firm. We can use it for our portfolio companies to improve them, but also invest in other companies that are affected by AI or that could use AI and therefore change their business model. So I think the ripple effects are actually tremendous and will affect most businesses. So it's not too late at all.
Until we get to that shakeout period, Bain Steve Pagliucci said that it's 1999 for AI right now, as it was for the internet then, that we're still in this moment of unsure how things are shaking out, but it's turning into a bubble until we realize what exactly it is. Do you think he's right? Is there a bubble in AI right now, especially when it comes to valuations?
I'm sure there is, and it's for the pure play players. And I think a lot of venture has focused on AI because it is the hot topic, like blockchain was the topic maybe a year, 2 or 3 years ago. So, of course, there is an absolute bubble. But I think what's interesting is, like the quote I think is very relevant, it will have effects, AI, that is over the next decades. Like technology, I mean, it's not like disappeared when 2000 came and we had the crash. It actually, today, it's everyday's lives. And the same thing will be with AI.
You mentioned blockchain. When you were head of tech, you also helped launch a blockchain fund. How are you feeling about it now? Because we've had these strange waves where we've been hyped about certain founders that turns out to be unrealized and maybe even worse than hype. You have ETFs, that a lot of hype about that. The reception has been lukewarm. What is the prospect for blockchain now? This idea that it's going to change the economy, is that falling to the wayside?
Yeah, I think what's interesting about blockchain is so one needs to decouple it from crypto. So a lot of the talk has been about exchanges, crypto, uncertainty of the market. That's one topic. Another one is blockchain. which is basically there to improve traditional industries. So logistics, for example. So if you would go to big logistics companies nowadays, I'm sure they would use blockchain in order to track parcels and everything else. And that investment will continue. So very similar to AI. It was very hyped a year or 2 years ago. I do think it is less in the news today, but it still has very significant consequences on a vast range of industries and will continue to do so.
Beyond tech, where do you think the opportunities are in Europe right now?
So from Europe itself, there are many things. I think we look at cybersecurity, which is tech-related. I think there is a fragmentation sometimes in Europe happening where there are more country-specific teams happening. So I think there's many pushes, actually, but it tends to be more local. For me, mostly cybersecurity and data, which I've been traditionally focusing on, where I still see the opportunity.
You can't shake off your tech roots.
I just can't change that.
Gotta respect that. You know, but before I let you go, we are in this environment, as we were saying, that exits become harder. And investors, LPs, they want their money back before they invest again. Who becomes the important source of capital then for this industry? Is it retail? Is it Middle East, you know, tapping into Investcorp's roots? Who becomes that next source of capital as LPs also feel frozen and unable to invest?
Yeah, I think it's a very good question, actually. I mean, at the moment, obviously, IPO markets are challenged. So historically, and this is actually what is probably more interesting for me and others to watch on, less what happens to interest rates, but actually what happens to the IPO market. Because as that opens up, you open up a massive exit channel that then will ripple down the industry and will help effectively all businesses to position themselves. So IPO market, let's say, challenged. I think there is a trend at the moment with continuation, single assets, private equity, keeping assets longer. I actually love the idea of more evergreen fund structures, where I think the industry should move to in the mid or long term. So it could actually provide the capital itself, but give at the same time liquidity to investors or an option to take it out. Other than that, we'll just have to see more exits.
Hey, it sounds like a time of structural change for the industry and exciting change. Gilbert, really wonderful to catch up with you. Enjoy the rest of the time of your conference here. That is Gilbert Kamieniecki. He is the head of European private equity at Investcorp. Anna.
Danny, thanks very much. Bloomberg's Danny Berger at the EPEM Private Equity Private Credit Conference as well, increasingly over in Cannes, with some really interesting news lines. Getting away from leverage was the guidance we got there from that interview. Let me go to some breaking news coming through from Puma. This is the sportswear maker, of course, over in Germany, and something of a profit warning coming through here. You can see the stock responding, down by 5.3%. They're guiding lower on their EBIT, so 620 to 700 million euros is the new range. The estimate in the market had been 783 million, and sales for the fourth quarter and EBIT, both of those numbers coming in just shy of estimates, and maybe even more than just shy when it comes to the Q4 sales number, 1.98 billion against an estimate of 2.26. We'll continue to watch that one and any read across into other similar businesses, of course. Coming up, we'll get back to the geopolitical stories of the moment. Turkey's parliament approved Sweden's accession to NATO after months of deliberations. So why is Hungary holding out on its approval for the new NATO member? We'll get details next. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Joe Matthew and Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, live around the world every weekday at 5 p.m. Eastern, only on Bloomberg Television. Context changes everything.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This is Bloomberg Markets today, 44 minutes into a European trading session that's pretty positive for European stocks. Technology and mining stocks doing pretty well. Consumer-facing products a little bit less so today. Let's get to some of the other top stories that we're covering here at Bloomberg this morning. Donald Trump has won the New Hampshire Republican primary, dealing a blow to his only major rival, Nikki Haley. The former president's victory comes a month ahead of the primary in Haley's home state of South Carolina, where polls also give him a commanding lead.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
United Airlines is no longer counting on Boeing's largest 737 MAX model as manufacturing lapses threaten further delay. United has not cancelled its order for the MAX 10, but has removed it from internal planning. Meanwhile, Alaska Air says it has found loose bolts on, quote, many of its Boeing 737 MAX 9 aircraft following inspections after the mid-air blowout earlier this month. Boeing says it's deeply sorry for the significant disruption to airline customers. Bloomberg has learned that the European Union is progressing with plans to apply a windfall tax to the profits generated by frozen Russian central bank assets, while opting not to seize the immobilized money outright. Sources say EU ambassadors will discuss the windfall tax later this week after foreign ministers gave their political blessing on Monday. Turkey's parliament has approved Sweden's accession to NATO after months of deliberations, leaving Hungary as the lone holdout to the defence alliance's enlargement. Sweden applied for membership to deter Russian aggression after Moscow's invasion of Ukraine. Joining us now with some analysis about where we are on this NATO enlargement story is Bloomberg's Niklas Rolander with us, who can tell us some details. Niklas, what remains for Sweden to do then to become a NATO member? We know Hungary has a role to play here.
Yeah, the first thing that needs to happen is for Erdogan to sign off on the parliament's decision yesterday. But then Hungary's parliament also needs to make a decision on approval of the Swedish accession. And the Hungarian parliament is in recess currently, so it is a bit unclear when that might happen. Hungary's President Viktor Orban also yesterday invited the Swedish Premier Ulf Kristersson to Hungary for negotiations on Sweden's NATO membership.
Okay, so that's where we are on the trajectory here. Why has it taken so long for Sweden to get to this point? So we have this parliamentary approval in Turkey, still waiting for Erdogan to sign, as you say. Hungary still remains to be persuaded, but some sort of conversation is expected to take place. Why has it taken Sweden so long to get to this point? Because we've seen other Nordic countries already join.
Yeah, I mean, I think, first of all, it's worth noting that it took less than 5 months for 28 of 30 allies to ratify Sweden and Finland's applications, which is a record speed for the alliance. So it was really Turkey and Hungary that were the lone holdouts for a long time. And in the case of Turkey, I think it's fair to say that it was a combination of legitimate concerns from Turkey's side about the activities of Kurdish terrorist groups in Sweden, and also bilateral relations such as arms sales to Turkey from Sweden. combined with an ambition from Erdogan's side to extract concessions not only from Sweden but from other allies as well, in exchange for approving Sweden's ratification. And when it comes to Hungary, it's less clear, I would say, what exactly they want from dragging their feet on this. But Hungary, of course, has been widely criticized by the European Union and European Union member countries, including Sweden, on what they see as backsliding on democracy, an erosion of the rule of law in Hungary. And it's possible that Orban wants to send a message that that they will hit back at those criticisms, and also send a warning to countries like Sweden to act more favorably towards Hungary in negotiations with the EU.
Nicholas, thanks very much. Thanks for the update, Bloomberg's Nicholas Roland on the expansion of the Defence Alliance, the expansion of NATO. We'll get back to the markets shortly. More from our conversation with the CEO of ASML, shares of Europe's most valuable tech company, jumping this morning after the business posted a massive beat on fourth quarter bookings this morning. More from that conversation shortly. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food. It gives us jobs. It gives us, of course, oxygen. We're taking too many fish out. We're polluting it. We're making it warmer. And only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance. Our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
The general problem with AI is it gives humans superpowers. So it gives superpowers to great humans, right? It gives superpowers to people in manufacturing and research, and that's awesome, right? But it also gives superpowers to people that want to influence elections, that want to bring people down, that want to do like crime. We've already seen AI automating like blackmailing and cybercrime. So I think that's something where, unfortunately, criminals and totalitarian regimes are often the very first that are using these opportunities.
That was the CEO of the artificial intelligence startup Aleph Alpha on the issues around AI. The company is trying to build a European rival to OpenAI and has raised more than $500 million from industrial giants and financial investors. We mentioned it in our conversation with SAP a little earlier on. Now, sticking with technology in Europe, ASML orders more than tripled last quarter in a sign that the semiconductor industry is resurgent. The CEO, Peter Venning, spoke to Bloomberg's Tom McKenzie about demand for its most advanced technology.
90% of our business in China has to do with mature technology. And that's the technology that we need for all the major transitions. You know, if you think about energy transition, the electrical vehicle transition, digitization, rollout of the smart grid, you know, life sciences, it's all mature technology. That's where the masses are, yeah?
So what is your message to those in Washington, lawmakers in The Hague even, who are pushing to expand those restrictions beyond the most cutting-edge lithography machines, to expand those restrictions on the sale of lithography to China?
Well, you know, I have full respect for national security concerns. That's not the point. But I think we need to take into consideration that this chip industry has created an almost seamless ecosystem across the globe that has given us massive advantages in terms of innovation and cost reduction. So that from an economic point of view, we need to make sure that that economic system that we have created, which has given us so much benefit, that we keep that intact. It's not about national security. It's about making sure that innovation can keep going. Yeah?
You're stepping down in April. Does your successor at least have to war game the possibility, the scenario where ASML has to operate in a global market ex-China?
Well, you know, I don't know whether he's wargaming. I don't think he's a gamer, to be very honest. You know, we'll just have to deal with the reality. But I also, you know, I'm an optimist that worries a lot, and I do believe that we have created, you know, macroeconomic systems that are so dependent on each other that I think that is a scenario you can always put into a game, but I don't think that's a very realistic one.
You do not have generative AI without ASML. It's as simple as that. Without your extreme ultraviolet lithography machines, how much demand are your clients saying they are seeing for chip making equipment to generate those kind of AI chips?
Well, let me first of all say that I think the full extent of what AI could bring is not totally clear, because it's all about the applications, yeah? And that still needs to develop. But one thing is absolutely sure. It's going to need massive amounts of compute power and storage, data storage. So I think without ASML, without our technology, that's not going to happen. So it's very clear that it's going to be a big driver going forward for our business and the business of our customers.
That was the ASML CEO, Peter Venning, speaking to Bloomberg's Tom McKenzie a little bit earlier on this morning. Let's just recap some of the market moves for you this morning as we bring this first hour of European trading to a close. We'll start with the bond market. We see there's some movement. Yields coming down on across the European bond space. We've got the French 10-year in here. Could have picked the German or many others. But that's the direction of travel after we got the weak set of data coming out of Germany and France. Even if manufacturing was a bit better than expected, the services and composite numbers weaker than anticipated. And so that seems to be what's guiding thinking there. ASML and SAP, both of those doing very well on the back of the earnings stories we've talked about a lot, a restructuring taking place at SAP as well. And Puma moving to in the other direction, perhaps reflecting some concerns around the consumer environment there, down by 6.4% on the back of what amounts to a profit warning coming through from Puma this morning. Their EBIT forecasts certainly missing estimates. That is it for markets today. And markets today, broadly speaking, are rallying pretty strongly, up by 0.8% on the stock 600. You can get insights from the team that puts together the Markets Today blog. Go to the Bloomberg UK website or TLIV Go for the blog. The Pulse is up next. They'll continue to talk you through these market stories. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg. Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter. And here's what's coming up on today's program. Donald Trump races towards a rematch with Joe Biden after beating Nikki Haley in the New Hampshire primary. Well, ASML soars as fourth quarter orders triple smash estimates. The chip equipment maker says it sees signs that the sector is recovering. Plus, Netflix surges, gaining 13 million new subscriptions in the fourth quarter, marking its biggest jump since the pandemic. So let's take a look at the European markets map. Again, a lot going on when it comes to some of the earnings. It was our first day of full earnings. A lot of the, upside, if you look at that, will probably come from earnings because of the good news pricing in, being already priced in if central banks do end up actually cutting as much as expected. Now, if you look at some of the things that we're watching, again, we've had some pretty strong earnings. We're also looking at China's latest move to stimulate the economy and whether that's boosting some of the stocks. Certainly resources or shares of resource companies are up. ASML soaring after Europe's most valuable technology company said orders more than tripled. Some of the other things, SAP also jumping. So we look at that. The other thing we look at is Euro data. Now, this is important PMI manufacturing for services and services ahead of the ECB on Thursday. Euro area January manufacturing PMI coming in at 46.6, a touch better than expected. It's still in contraction territory, and if you look at the services, they're falling to 48.4. So that's a little bit worse than expected. Composite overall 47.9. The forecast was 48. So really not far off what economists had predicted. But again, this difference between services actually doing worse, manufacturing doing a little bit better. Now, the former president, Donald Trump, has brushed aside rival Nikki Haley to win the New Hampshire primary. The result moves Trump a step closer to claiming the Republican nomination for president or for the Republican Party and raises questions about the viability of Haley's campaign.
She doesn't win this. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
I want to congratulate Donald Trump on his victory tonight. He earned it, and I want to acknowledge that.
So we're now joined by Bloomberg's Kriti Gupta, who's been following this very closely. So, Kriti, the next step is, of course, February 24th. This is the next time that actually we hear from Nikki Haley in her home state. So how likely is she to actually do much better then?
Well, the pressure is really on, as if it wasn't for the New Hampshire primary, because the margin of success, Fran, was really important here. Nikki Haley had to basically come out and close the gap. Instead, she lagged by 11 percentage points. President Donald Trump coming out with about 54.6% of the vote. Nikki Haley with only 43%. So now, not only in her home state of South Carolina does she have to show up, she has to show up by a pretty significant margin, because what's really at stake is not just her kind of progress in that state itself, but also the donor money that follows, and that's where she's starting to lose a bit of momentum.
So, Kriti, who's likely to be Trump's running mate? Kriti, I don't know if you can hear us. We may have lost Kriti Gupta. We'll get back to that. Of course, one of the big points that we need to make sure we understand is, first of all, who Donald Trump is running with, and some of the other things are, of course, what happens next. We also had, of course, the difference. We tend not to follow very closely what's happening with Biden and his team, but it was the first time that Biden and the vice president were also rallying. That was yesterday. Kriti, I don't know if we have you back. Bit of a mystery whether you're back or not. I think you're back. Wonderful.
I am back.
Do we know anything about? Do we know anything about Trump's running mate?
We do know a little bit about President Trump's running mate. There's a lot of speculation about who he's actually going to pick. There's a name, that is coming up quite a bit. Elise Stefanik seems to be the name that is starting to make a lot of the rounds. This is a Republican representative who's representing the District of New York. And remember, right now, in terms of the kind of political strategy around President Trump's team, the vote that he's really losing out on at the moment is the female vote. So there is some question about whether or not he's going to pick a female running mate. If that running mate is not Nikki Haley, which it seems like it may not be, given Nikki Haley's really ramping up some of her rhetoric against President Donald Trump, Elise Stefanik is the one that seems to be coming up time and time again, simply because she's making her name around her take against some of the kind of elite colleges and the leadership at the likes of Harvard, Princeton, and Yale, and the anti-Semitism around there in the fallout of the Israel-Hamas war, which again is a very hot topic issue, not just for the Republicans, but for the Democrats as well. Remember, they are actively trying to target Joe Biden's foreign policy record. So that is one name that is coming up. Of course, the others are going to be some of the other Republican candidates that had dropped out of the race. Tim Scott, Ron DeSantis, they're all kind of in the running, but it's still unclear who President Trump is leaning towards.
And Kriti, thanks so much. Kriti Gupta there with the very latest, of course, on New Hampshire. Now, for more on this and what's moving the markets, we're joined by Charlotte Ryland, Head of Investments at CCLA Investment Management. Also with us, Bloomberg's Justina Lisa. Justina, thank you so much for joining us. Also, thank you to you, Charlotte, for being here. Look, I don't know whether we start game theorying, actually, what Trump does to foreign policy and the economy, or whether it's just a little bit too soon.
I mean, it's probably a little bit too soon. I mean, he has said some of the things that he's planning on doing, which seem to be about tariffs, and not just having tariffs against China, but having it more broadly into Europe as well. He's also talking about, obviously, doing things with migration, which has implications in terms of the employment market. So I think we'd say both of those are potentially quite inflationary and therefore, not entirely good for markets.
Are you expecting more fragmentation around the world and therefore more onshoring? And that's also, of course, fueling inflation. But could it also mean U.S. stocks do better than others?
I mean, I think in terms of that sort of onshoring debate, I mean, we've had, Biden has come in and has actually continued to be, fairly antagonistic towards China. We've got various restrictions in terms of the tech sector in particular, in terms of what can be exported out there. So I think in terms of that rhetoric and the reality in terms of China, maybe not that much of a change. But, does that mean that the US does better? I mean, I think it's all dependent on the sort of global growth outlook.
So, Justina, how are the markets looking at this? Or how will the markets look at this as we get closer to November?
Yeah, I mean, for now, I don't think markets are kind of like pricing in a Trump victory just yet, but you certainly have like no shortage of like punditry beginning to kind of weigh on this. And I think a few things they're focused on is, what does this mean for European stocks, which are always a bit more exposed to global trade, especially with kind of the German economy kind of not in a great state right now. And of course, the same can be said of China, which has already seen worse tensions with the U.S., but maybe Trump will be more heavy-handed. China, another kind of spot in the world that has seen like sinking markets. And I think apart from that, it's kind of a bit harder to tell for like U.S. domestic stocks. And I think a lot of people famously remember, a lot of people got the direction of markets wrong after Trump was elected.
Yeah, and I guess I wonder what it means for Europe. I don't know where you stand, Charlotte, on what Europe will do. And again, if they're stuck between the U.S. and China, does it bolster European European, cooperation, and therefore does it lift some of the earnings, or is it going to be much more difficult for them?
I think it's going to have an impact on things like policy towards the Ukraine. So potentially you'll see the US pulling back from the support that they've had there, which will then force Europe to maybe step up a little bit. And then in terms of the trade position, if he is more antagonistic towards those European exporters, then clearly that's a more difficult situation.
Okay, where do you see the biggest value overall of what you want to be buying into 2024?
I think, for us, it's some of the areas that had a fairly difficult last year. So the healthcare sector, there was a couple of areas there, whether it be the life sciences tools, which are struggling with destocking, but also where, biotech spending had begun to slow down. So I think, you'll begin to see sort of an improvement with things like Thermo Fisher, Danaher, those kind of companies. But equally, some of the devices companies, Novo Nordisk was the story last year, and of course, the obesity drugs. But and there's been this assumption that everything else is going to struggle because obesity will be falling. But actually what you're seeing is things like diabetes pumps are still being used, sleep apnea devices are still being used. So actually, we think there's a bit of value in some of those devices companies as well.
And just, when you look at what's supporting stocks, is it earnings from now on?
Yeah, I think investors are really loving this Goldilocks narrative right now, especially in the U.S. I think people can still see that. The economy, I think I saw this quote the other day, it was like bulletproof, and it seems like the real economy is still doing well. And at the same time, even if the Fed does not cut rates as aggressively as we thought, at least it seems like, the rate hikes are behind us, and this is a great state for markets to be in. And that's why people kind of are starting to wonder, has it gone too far? Are valuations too extended? I think those questions are definitely getting raised right now.
Yeah, especially given the geopolitics. Even without the U.S. election, there just seems a lot that could go wrong that markets are looking through.
Right, exactly. If you look all around the world, it seems like any place that's a bit more exposed to global economic growth is definitely slowing down. Of course, we have to see whether China comes up with more aggressive stimulus measures, which they haven't really so far.
All right, thank you both for joining us. Justina Lee there from Bloomberg, Charlotte Ryland from CCLA Investment Management stays with us. This is what Netflix is doing pre-market. Now, they have, Netflix yesterday had some pretty incredible results, adding more than 13 million customers in the last 3 months of 2023. It's actually the best quarter since the early days in the pandemic. Pre-market, you can see Netflix gaining 9.2%. The strong numbers beat estimates. They also beat sales across the world. So we'll keep an eye on Netflix. They're also buying some of the live events, which could give them a little bit more, I guess, fluctuation going forward. Now, much more to come. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, that catches everybody's attention.
As time went on, their ideas got weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in?
I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
So private sector activity in the euro area contracted for an 8th month in January. The weak start to the year comes after a likely recession in the second half of 2023. Now, for more on this, we're joined by Bloomberg's Jana Rando. Jana, always great to speak to you, and really congratulations on all of your scoops on ECB and others. But walk us through the PMI data that we've actually had today.
Right. It's really a mixed bag, Francine, a mixed bag of news out of the PMI data this morning. We saw manufacturing doing better than expected. We saw services doing worse. And overall, we saw activity contracting at the start of 2024. And of course, that builds on contractions in the third quarter and most likely on the fourth. Data will be out next week on that. So really, it looks like the recession the Eurozone economy is in extended into at least the start of 2024. Now, if you wanted to be optimistic, you could look at the contraction in new orders that was the smallest since June, so a little bit of positive news there. It stabilized employment. It helped underpin business confidence across the private sector. But also, if you're a pessimist, then you saw in the data that supply chains actually lengthened for the first time in a year, adding to inflation pressures. And that, of course, is a reflection of the tensions we're currently seeing in the Middle East with attacks on ships traveling or attempting to travel through the Red Sea. So a lot of mixed information in there, pointing to a difficult situation, a difficult start, and obviously a difficult decision or a difficult job for the European Central Bank this week to analyze and assess the situation.
Yeah, so Jana, does it make it more likely that actually, I mean, how does it change the ECB tomorrow? Again, it's kind of like it's at the margins, but it's a very delicate, I guess, forward guidance that they need to calibrate.
Yeah, I mean, it probably adds to the case for not really offering forward guidance because the situation is just so in flux and could change at any moment. A lot will depend on whether we are, on the verge of seeing another supply chain crisis. If we see prices surging, not just for goods and services, but also for energy, if the attacks in the Middle East get worse, or whether ships and vessels will adjust, suppliers will adjust, take the trip around Africa, and things will more or less find a new normal. So a lot of things are uncertain, and the president said as much last week in Davos, as you know. Not just watching supply chains and energy prices, but also wage growth and profit margins. So a lot of information that's still needed until policymakers can really make up their mind about the stance on interest rates. Of course, we don't expect much to happen this week. Interest rates are going to stay on hold, the deposit rate at 4%. And we'll see how confident they are in telling us where the direction of travel will be later this year.
Yeah. Jana, thanks so much. Jana Randau there with the very latest, of course, on the ECB and some of those PMI data. Now, still with us, Charlotte Ryland, Head of Investments at CCLA Investment Management. Charlotte, I don't really know what you do with the ECB and some of the European stocks right now. Does it kind of, do you wait for near the summer to try and reassess, or is there a tactical play now?
I think, in European companies, it's going to be looking for where there are some long-term drivers. Yes, the industrial sector looks to be still quite soggy, and there's clearly a linkage to China, which probably won't be helping them very much. But if you've got companies like, say, a Schneider Electric, which are playing on that energy efficiency thing, we still think that, there is some value to come from those businesses.
Do you play Europe versus UK, or how do you play Europe in general?
I think for us, we invest globally, so we are, we're not terribly bothered whether it's quoted in Europe or the UK or where it is. If it's a great company, and there are some great companies in Europe, then they'll find their way into the portfolio.
The BOJ and actually Japan in general is probably one of the most exciting spaces right now. Again, do you wait tactically, or is now the right time to move in before they change policy?
I think, Japan market has clearly done very, very well, and that's people anticipating that we will move away from this zero interest rate policy, that, about the only central bank that's still clinging to that. And there is clearly some corporate governance reforms that the government is trying to push through as well. So there are signs that that Japan could get to be more interesting. I think the struggle is some of the great companies tend to trade at pretty unattractive valuations. They're well known to be the good companies, and there's a lot of businesses that are going to they've got a lot of work to do to try and get returns on capital up to where you're getting in say the US or Europe.
Charlotte, thank you so much for your time today. That was Charlotte Ryland there from CCLA Investment Management. Now, coming up, we'll bring you more on reports of a prisoner exchange deal between Israel and Hamas. That's next, and this is Bloomberg.
The younger generations are more, of course, pay more attention to sustainability, and so they are looking at brands that are greener. But you have to make sure you're authentic because they hate greenwashing. But what is very important to remember is that none of them, whether they're young or not, will ever sacrifice product quality and efficacy to sustainability, which is why part of the big transformation of our R&I, where there's this €1 billion we spend every year, most of it is spent on transforming our formulas from petrochemicals to biosourced ingredients and green sciences, but without losing the efficacy.
Source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Now, Reuters is reporting that Israel and Hamas have broadly agreed in principle to exchange Israeli hostages for Palestinian prisoners during a possible month-long ceasefire. The news agency is citing 3 unidentified sources. Now, let's get more from Bloomberg's news director for Europe and the Middle East, Roz Matheson. Roz, thank you for joining us. So what do we make of these reports of a deal?
Well, there actually are multiple reports that have been going around in recent days, and they vary in length in terms of the potential duration of a pause or a ceasefire in the fighting, anything from 1 month to 2 months to enable the sort of staggered release of the rest of the Israeli hostages being held in Gaza, but also for the release of further Palestinians who have been held prisoner, jailed rather, in Israel. And there's lots of discussion about what this deal might look like, when it might start, and whether either side would be willing to agree to it. And it's very unclear at this stage whether that can even happen, because Hamas is very insistent there needs to be a proper conversation, not just about a ceasefire, but about the end of the conflict before there can even be a ceasefire to end that conflict. And Israel is equally adamant that their goal is to eradicate Hamas completely to ensure the October 7 attack that happened on Israel can never happen again. And so there's fundamental goals there that they say need to be achieved, and therefore talk of a ceasefire is very difficult. So it's hard to know at this point really if those reports are going to gain traction or whether either side or both sides will agree to them.
Yeah, and Roz, the UN, of course, has warned that the Prime Minister Netanyahu's rejection of a two-state solution will prolong the conflict. It's also getting a lot of condemnation worldwide. So how much support does Netanyahu have on his view?
Well, he has probably more support inside Israel than outside, as you noted. The US, countries in Europe and elsewhere in Africa and beyond all say that some sort of two-state solution eventually is the only way to resolve this once and for all, and that's for a proper Palestinian state. That's something that the Netanyahu says that Israel cannot fundamentally agree with. And so he's really isolated increasingly globally on that front, despite the pressure from the US, Europe and others to put it on the table. He says, frankly, no, I'm not going to do it. However, it probably does have a good amount of support inside Israel. What we've seen is a real hardening of support around the war inside Israel in recent months. That's not necessarily support for Netanyahu himself as Prime Minister, but for the war that's going on, and certainly a sense that Israel can never put itself in the position again of being at risk of attack as it was on October 7, if that is either from Hamas in the future or Iran or one of Iran's other proxies, including Hezbollah. And so he's pretty determined, and he seems to have the support at home on it.
So, and today's big take, Roz, also looks at the economic impact of missile and drone attacks against civilian ships in the Red Sea. So what's the impact been, and what do we know about what it would look like in a couple of months?
Well, it is about 12% of seaborne trade, so it's a significant amount. And it's been going on for weeks and weeks. And what we're seeing is this protracted disruption to trade in the area. So ships having to take a very long way around. And that's impacting not just tankers with oil and gas. I mean, that's critical, obviously, for supply in the region and globally, but also things like parts for cars, parts for companies, livestock, fresh produce, stuff that doesn't do very well, sitting on ships for extra weeks at a time. And we're seeing that having a knock-on effect on the supply chain globally. Ports, companies, countries many, many miles from the Red Sea are having to make adjustments to their supply chains. And what it really shows us is that despite efforts to diversify supply chains, we're really still very interconnected globally on that. And one thing that happens in one part of the world can really impact the rest of the world. Does that have a knock-on effect at some point on inflation, for example? So possibly very wide-ranging effects for a long time to come.
Roz, thanks so much. Roz Matheson there with the very latest, of course, on the Middle East. Coming up, we talk private equity. We're at the world's largest private equity capital conference in Cannes. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes.
Or
yes. Not keeping. Look, people have conviction, or they invest for the. If they invest for the right reasons, just keep at it.
Later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old. You're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
Well, Donald Trump races towards a rematch with Joe Biden after beating Nikki Haley in the New Hampshire primary. ASML soars as fourth quarter orders triple, smashing estimates. The chip equipment maker says it sees signs the sector is recovering. Plus, Netflix shares surged pre-market after it added 13 million new subscriptions in the fourth quarter, marking its biggest jump since the pandemic. Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. So the private equity and private credit market has grown more than threefold since 2015, with private credit managed assets expected to reach $2.8 trillion by 2028. Now, that's the backdrop of the EPAM Private Equity Conference in Cannes. Let's go straight to Bloomberg's Danny Berger, who's at a conference with a guest. Danny, I know it's a tough gig in Cannes in January.
I know. Work is so hard, Francine. I'm half tempted after this interview, where my next interview and I are probably going to get on one of those boats and sail away. And that is Carmen Alonso, TKO Capital's head of UK and Iberia. Carmen, I know you've got lots of work to do. Don't worry. We're not going to sail away today. Look, we're in this interesting time for this market because last year was okay, even though it was a slow year. We'd recently spoken to Apollo, though, that said that people overpaid for assets in private markets, and now the air is starting to come out of the balloon. Is he right? Is the air, the proverbial air, finally starting to come out of overpaid assets?
Hi, good morning, and thank you for having me here. Valuation is obviously the key topic of discussion, and I'm sure we will be hearing a lot about it at IPEM. I would say that obviously valuations were at the peak in the 2021 with this sort of peak of activity in M&A as well, and that sort of inflated prices. Where we are today, where there is a subdued M&A environment, is having an impact as well on valuations. But private markets, the beauty of the private markets is that you have time to walk through all of that. You don't need to enter at the peak of a valuation, for example, and then have pressure to exit. You have the time to actually work, have a positive impact and add value to your portfolio companies. You are able to create growth, improve the situation and the competitive advantages.
Is time starting to run out? And I know that's kind of trashy to say, but this idea that it's been a slow market, LPs, investors, they want their money back, they want exits. Is it starting to become crunch time for that?
It's true, there has been a significant pressure on liquidity in the market, particularly for the LPs, so there is pressure on the GPs to offer that. Given where we are today in terms of a little bit more certainty when it comes to inflation, inflation went up a lot last year, but it has come down as well. There is a little bit more visibility in terms of, or expectations of people in terms of where interest rates are going. And with that kind of certainty in the backdrop in macroeconomic conditions will enable us to have a little bit of an overview in terms of where valuations are going, and people will be able to factor that in the valuation. So yes, I think there is a little bit more clarity in terms of what companies are valued at.
I guess there is that uncertainty, though, of geopolitics and what that means for inflation. Every day we hear and see a new headline about issues in the Red Sea, another Houthi attack, another US-UK strike. We did see some UK retailers, Next, Marks & Spencer, Tesco, all of them said that, look, customers might need to start paying more because of this issue with shipping routes. Are you seeing that in your portfolio companies at all?
We are in a situation which is extremely fragile, and I was just referring with a little bit more certainty in terms of the direction that inflation and interest rates are going, but that is very fragile. Any of the shocks that you are mentioning, for example, what's happening in the Red Sea, is going to have an impact again on supply chains, will probably have an impact on inflation up again. So we need to be very careful because this is definitely, we are not out of the woods. Our portfolio companies have learned to be resilient, have learned to be flexible, and have learned to adapt to the difficult situations. And so, when we work with the companies, we try to make sure that they have that flexibility and adaptability, which is critical in today's market conditions.
So what does that look like? Is that the onshoring, friendshore kind of model?
Yes, that's part of it, but that is, again, inflationary if you think about it. There are a lot of, that's why I'm saying that the situation is fragile at the moment, because a lot of the trends are very inflationary, which puts pressure on the fragility of the system right now. So onshoring, reshoring, demographics as well is inflationary. Energy transition is inflationary. And so you have to be really careful when you plan sort of the management of your assets. Short-term, mid-term, and long-term.
It's a lot to think about. And just to add another one to the mix, Carmen, is the uncertainty of an election. More than half the world's population goes to an election. One of your main markets, the UK, is likely going to have an election this year. What happens to deal flow? What are you expecting for deal flow in an election year? Does it change? Does it alter things?
I mean, it's fair to say that the uncertainty and unpredictability of elections will have pressure on deal flow and activity in any given market. When there is no uncertainty, investors tend to be significantly more subdued when putting capital at risk. So that will have an impact. The UK is in a slightly unique situation where we just managed at the end of 2023 to come out at around 1% in growth. So we managed to avoid the recession. But on the other hand, we have inflation down to around 5%. So it sounds like we are in a better position that we entered 2022. But the situation that it has is been underinvested for many years. There are demographic pressures as well, skill set, a lot of industrial actions, and then on top of that, an election. We don't know when that election will take place, what time during 2024, beginning of 2025. Until we have an election, we are going to maintain that uncertainty and what is going to be the policy going forward in terms of investment and all of that. And therefore, will have an impact on our markets.
Right. I mean, what difference does it make if Labour wins the next election? Is that good, bad for business?
Difficult to say, because there are so many measures that need to be taken, for example, public investment, taxes, all these different sort of parts of the policy making that one will need to understand much better ultimately what the decisions are. But this is an opportunity for business, right? For us, we have UK represents a strategic market where it's our second largest office. When there is uncertainty, there is opportunities. A lot of people are on the sidelines, so we are there on the ground with 75 people looking to deploy capital and find interesting and attractive opportunities to invest.
One of the other sort of regulatory government policy things that tends to come up, and this came up in Davos again and again, it won't surprise you who it came from, that private capital needs more regulation. It was, of course, the bank CEO saying that. It's, the classic Jamie Dimon, private credit's dancing in the street with more regulation in banks. Do you think there's any truth in that? Does there need to be more regulation for the industry?
There is a lot of talk about regulation in the industry, and it depends who you talk to, as you absolutely said. The reality is that, the best regulation is to be self-regulated. Private markets are effective. They are growing. They are financing the real economy. They are actually the go-to capital for many mid-market companies, whether it's private equity or private credit. And last but not least is financing some of the mega trends that we are seeing that need massive amounts of investment, for example, the energy transition or regenerative agriculture. So we are a sort of critical component at the moment of our economies. So whether you need regulation or not, what you need is the growth and the private markets to be present and cooperating with public money in order to drive some of these mega trends forward.
Right, and so you mentioned some of them, but I can't help but wonder, in 2024, what sector do you think is the real winner in the UK and the Iberian Peninsula?
Well, we are very much thematic investors, and I've mentioned several times energy transition, climate change. Cybersecurity is another one that is critical, considering sort of the era and the technological developments that we are having. It's also an opportunity, but very much of a threat. So cybersecurity is one of the sectors that we are very much focused on. I mentioned regenerative agriculture, aerospace and defense as well. There are as you mentioned before, geopolitical tension. So having strong aerospace and defense sectors in our markets are absolutely critical as well. And we are there supporting companies with capital to make them stronger.
Carmen, that's an excellent place to leave it. We're going to have to leave it there. Carmen, thank you so much for joining. Francine, that was Carmen Alonso, TKO Capital's head of UK and Iberia.
That was a great conversation, Danny. Thank you so much. Danny, of course, is at IPEM, the private equity conference in Cannes. Now, we'll have plenty more, of course, from Cannes looking at private equity. Also, there's a little bit of breaking news across the Bloomberg terminal just minutes ago. This is from TASS, the news agency in Russia, has said that a plane carrying 65 Ukrainian prisoners has crashed. Now, this is according to the Defense Ministry spokesperson. We understand that there are 65 Ukrainian military prisoners on board, as well as 9 crew and guards that crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft, and we understand that it came down, again, while transporting the prisoners for an exchange with Ukraine. That's according to the latest spokesperson of the Defense Ministry in Moscow. Now, there was no immediate indication of what actually caused the crash. We'll keep an eye on that. We'll also look, of course, at some of the economic news out there. We had some Eurozone PMIs earlier this hour. Now we have the UK January services PMI rising to 53.8. The forecast was 53.2. Again, quite a similar pattern, but also manufacturing was a touch better than expected. Nothing huge, and both numbers are below 50, which still indicates a contraction. Coming up, more from our conversation with the chief executive of ASML. That's as shares of Europe's most valuable tech company jumped today after it posted a massive beat on fourth quarter bookings. That's next, and this is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Well, SAP shares, one of the biggest gainers on the Stock 600 today, as Europe's biggest software company posted fourth quarter earnings beating analyst estimates. Now, the chief executive, Christian Klein, spoke to us about the company's investment in AI and growth prospects.
We are very confident about the growth potential of SAP until 2025 and the years beyond. And so SAP will also further invest. So we actually expect that at the end of the year, we actually end up with the same headcount as we left 2023. And for the years to come, there will be investments, there will be headcount growth, but of course, under proportional to our top line growth.
Well, the SAP Chief Executive Christian Klein speaking to us a little bit earlier today. Now, another stock gaining, ASML, Europe's most valuable tech company, jumping as fourth quarter orders more than tripled last quarter. Now, it's being seen as a sign that the semiconductor industry is actually resurgent. Now, for more, let's bring Bloomberg's Tom McKenzie, who spoke to the ASML Chief Executive Officer earlier. Tom, it was such an interesting conversation. So what has the CEO been saying about his outlook?
Yeah, Francine, I'm on the ground at the headquarters, the global headquarters for ASML. As you correctly said, the most valuable tech company in Europe, and have been speaking, as you also said, to Peter Wenning, the CEO of ASML. On these blowout numbers for the fourth quarter in terms of the sales, 9.2 billion euros, triple the quarter, the previous quarter. And a lot of that growth coming from their clients, their major clients, including TSMC and Intel and Samsung, for these extreme ultraviolet lithography machines. The demand is there, it's been holding up. And the key question, as you say, for this CEO was whether or not he now sees a bottoming in this semiconductor market. Take a listen to what he had to say to me.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
And Francine, despite the fact that they had this record sales data, order numbers out for the fourth quarter, they actually have a pretty conservative outlook for 2024. And Peter Wenning telling me, the CEO, that the reason for that is a lot of their clients are going to be absorbing some of these orders through 2024. He said 2023 was a top year, 30% growth. He doesn't expect to see that level of growth for 2024, precisely because they take down some of those inventories. But he does see 2025 as a really significant year. And again, these extreme ultraviolet lithography machines, they make possible these most sophisticated chips that go into everything, of course, from our iPhones to the data centers that power the growth around artificial intelligence.
So, Tom, is ASML now at risk of losing the China market?
And that is the key question, Francine, absolutely the key question, because what we've seen in the last few years are ramped up restrictions, of course, on the type of equipment that companies like ASML can provide to the Chinese market. And it's worth noting that ASML has a complete monopoly on extreme ultraviolet lithography, so the most cutting-edge machines that can produce the most cutting-edge chips. No one else is able to do that. They have been restricted from supplying those machines and the generation prior to that, deep ultraviolet machines, into the Chinese market. When I spoke, Joe, to the CEO, he said, look, 90% of the market actually for them in China is the mature part of the business. He's not too concerned, but in the fourth quarter, you did actually see sales coming down in terms of sales to China. China was very important in terms of a market for ASML in 2023. But his message to lawmakers in Washington and indeed The Hague here in the Netherlands is, look, this is a finely tuned semiconductor ecosystem. If you put further restrictions in place, there is going to be a cost to pay. But clearly, he acknowledged national security is a legitimate concern, and clearly that's where the focus is for many lawmakers sitting in Washington. I also asked him, of course, about generative AI and what his clients are telling him, and he says that demand is very much there. The demand for compute that underpins so many of these AI models, whether it's Bard or DeepMind or OpenAI, the demand is there, and he says that is going to be a structural upside for ASML in the years ahead, Francine.
Tom, thank you so much. Bloomberg's Tom McKenzie there in the Netherlands with a wonderful recap of ASML. Now, on to transportation. Alaska Air says it has found loose bolts on many of its Boeing 737 MAX 9 aircraft following inspections after the mid-air blowout earlier this month. Now, Boeing says it is deeply sorry for the significant disruption to airline customers. Meanwhile, United Airlines is no longer counting on Boeing's largest 737 MAX model as manufacturing lapses threaten further delay. Well, let's bring in Bloomberg's Sid Phillips, who, of course, is one of our star reporters when it comes to aviation and transportation. I can't really get my head around about how many bad news we have on Boeing. Now, this also the fact that Alaska Air chief executive came on venting his frustration after Bloomberg wrote this story. So it was a Bloomberg scoop originally on Monday. just if your customers turn against you, this is not great.
Yeah, it's terrible for Boeing because your biggest customers, especially United Airlines and Alaska Airlines, who are the biggest operators of the MAX 9, and also they have other Boeing models and Boeing 737 models on order, are sort of losing faith in Boeing. And so that is really the most significant sort of bad news for Boeing as they sort of try and get past this hump that they've had. I mean, the MAX 9's been grounded for 3 weeks now, and airlines are desperate to get the aircraft back into service. And so for Boeing, it's really sort of difficult to get sort of your biggest customers who are sort of now publicly commenting about how frustrated and angry they are.
Yeah, and 1 month you can see actually Boeing down 19%. How does Boeing turn this round?
It is really difficult for Boeing. I mean, I think airline CEOs as well as analysts have talked about how Boeing really needs to work on getting their quality up to scratch and make sure that they can basically produce quality aircraft. And that's really the key question for them. How do they go about sort of revamping their manufacturing process in order for customers to be reassured that their planes are basically quality and they make sure that the planes are safe to fly?
Thank you so much, Sid Phillip, of course, for the very latest on Boeing, some of the ups and travails. Now, we did have some eco news earlier this hour. The pound actually already on the move higher before the UK PMI numbers hit. At the moment, they're relatively solid. Readings only bolster that momentum. So look out for pound. Now, the other breaking news story that we're also mentioning, it's what's happening in Russia, saying that a defense ministry plane carrying 65 Ukrainian military prisoners as well as 9 crew and guards have crashed in the Belgorod region near the border with Ukraine. Now, this is an Il-76 aircraft. We understand that it came down while transporting the prisoners for an exchange with Ukraine. This is according to the Russian Defense Ministry. They announced that on Telegram, but there was no indication of what caused the crash. Coming up, Netflix has posted its best subscriber growth since the pandemic. We'll dive deeper into the streaming giant's fourth quarter earnings next, and this is Bloomberg.
This will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in?
I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
This
He's Bloomberg.
Well, Netflix shares jump in pre-market trading after the streaming service added more than 13 million customers in the last 3 months of 2023. Its best quarter since early on in the pandemic. Now let's bring in Bloomberg's Alex Webb. Alex, I mean, 13 million, this is a lot. Is it because the content is so good, or is there a trend that we could look at?
Yeah, there are a few different factors at play here. As you say, it is a big number. The market was looking for 8 million additions, so it's more than 50% beat on that. The two main things really seem to be, yes, content, as you say. They have had a few hit shows, Leave the World Behind, the David Beckham documentary among them, but they've also really managed to make headway on the efforts to stop password sharing, which forces people in different geographic locations who might be using the same password essentially to sign up for their own accounts. Around the edges as well, they are starting to make headway with their advertising supported model. They've got about 23 million advertising supported users at the moment, which is about 10% of the little less than 10% of the total. So all those three things are what's really driving the change.
We also, of course, heard that Netflix is now buying live events. Is this a change in business model? How surprising is this?
Yeah, they've sort of been trying out a few things in this space with greater or lesser success. They have now agreed a deal to get the rights for Raw, a world wrestling entertainment property, for the next decade, as well as some other WWE events globally. It's interesting, it is a live event rather than sport per se, because a lot of what they do is ultimately scripted. It's a meaningful amount of money, and ultimately, they're trying to drive engagement, which live sports and live events can do in a way that, particularly when it comes to their advertising business model, that are incredibly appealing for some audiences.
Alex, what can you tell us about Tesla? So I know some of the Chinese manufacturers are really doing really well, and then we understand that Tesla may be looking at starting a production of a new car in 2025.
Yeah, there are a few different things happening. So the market is becoming increasingly saturated, partly the Chinese players, not least BYD, which has overtaken Tesla now as the world's biggest maker of electric vehicles. But we're seeing a lot of automotive incumbents really start to make headway in the space, companies like Volkswagen and so on. The prospects of them introducing new models reported by Reuters. It looks like it could be a crossover compact car. That's what Reuters is reporting. The market has been looking for a new model lineup, which they've not refreshed for some time. When it comes to the earnings a little bit later, the main focus is on what the guidance is going to look like for this year. They delivered 1.8 million vehicles last year. The market is looking for about 2.1 this year. So any steer around that will be keenly watched by market observers.
All right, Alex, thanks so much. As always, Alex Webb there with the very latest on Netflix and Tesla. Up next, Bloomberg Brief, Managed Crowning in New York. Danny Berger is in Cannes. So you'll have a full roundup also of some of the private equity news that we're seeing in EPAM. This is Bloomberg.
We've invested more than $10 million in our employees over the past year, and we're going to continue to invest more. We're testing 4-day work weeks to help, especially our working parents kind of juggle that balance between childcare and your work. I know I deal with that all the time. This is really a people-first company. Even in an inflationary environment, you're going to see us continue to lead with our people.
Do you worry at all about a price wage spiral, not just here, but in the industry, in the economy?
Yes, and I think that this is something that many business leaders are focused on, and time will tell kind of how all of this lands.
I think the wage price spiral continues for quite some time, and I think we probably have been a lot less aggressive than we can be, and than many other companies have been.
In terms of raising prices?
Yes, we've taken our time. If you look at a 20-year history of pricing in this company, we've taken about 2% a year on average. We've never taken what we could. We've always taken what we should. We have to pay people more. We have been, and we'll continue to do so. We'll take a little bit of a margin compression on that as we've had to, and I think that's the right thing so that for the long term, Shake Shack continues to be what we're building, which is the next generation's burger joint.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning from our world headquarters in New York. I'm Manus Cranny. Danny Berger on tour in Cannes, speaking to the private equity leaders. Welcome to Bloomberg Brief. Let's set your agenda. Donald Trump wins the New Hampshire primary, putting him on course to win the Republican Party's nomination for president.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night. She had a very bad night.
China will cut the reserve requirement ratio for banks in early February, the bid to boost growth and markets. In tech, Netflix surges subscriber gains. ASML signals a revival in the semiconductor industry. From semiconductors to the financing of the engines of the world, she's taken to Cannes. She's in front of the boats. Danny Berger is on tour. But you're printing headlines. The big boys and girls of private equity are turning up and delivering capital. Danny, good morning.
Yeah. Good morning, Manus. I honestly, every time I look at myself in the return in the camera, I'm so close to being like, maybe I should just turn around and get on one of these yachts. There's one behind me called Lucky Us. I feel like that's ours. I feel like we should be on that. But you're right, Manus. I mean, I've had a couple interviews here so far, and it seems to be that the size of deals can keep getting bigger. I was speaking with Premier's David Hirschman, who said we could see a double-digit deal possible for private credit. That's never been done, and of course in this beautiful background as well. The other theme here, Manus, is that banks are back. Before this market, this industry was getting more market share from banks. They're coming back. They're doing more loans. They're eating into private credit's world.
Yeah, no, they're just eating in, and therefore they'll be stacking up with the human capital to close those deals. I think the other thing, we were chatting this morning, and you said, look, another narrative is that those companies that are waiting to refinance and waiting for the Fed to cut, this is going to create opportunities for the community that you're talking to there right now. And also, it's a bit of a risk with this.
Yeah, because the idea is how long can you really extend and pretend, to use one of your favorite phrases, Manus, that a lot of us thought we'd get rate cuts in the first quarter. It seems less likely considering all the pushback we've gotten. And of course, we'll find out more about that in the days and weeks to come. So potentially, if you can't just wait to refinance, do you need to fire sell? Do you need to sell assets on the cheap? For those who don't have to do that, it's maybe a good moment. And Manus, we're going to have more of those conversations throughout the hour. We're going to be speaking with Ardian's head of expansion, Francois Yergagnon, and Ardian, of course, is $160 billion. We'll also be speaking to the co-CEO of Eurazeo, that is Christophe Bavier, who has about $37 billion under management, Manus.
Well, therefore, we'll take advisement from those boys in terms of the themes. Danny, have a great day. I'm envious the backdrop that you have. It's freezing here in New York, but you'll know more about that next week. Let's talk about these markets. It's a heady mix of politics and policy. Policy from the Chinese in terms of getting ready to cut the triple R, the reserve requirement, injecting liquidity into the system, $139 billion. That pops the Hang Seng up by 3.5%. Schroders are saying, look, this could actually give you a better opportunity to get out of your China exposure. SPOs are up by 0.5%. Donald Trump, it looks as if he's cruising through. He takes New Hampshire. You're seeing Netflix on fire, adding more customers, more price rises. Will they come? There is Netflix in the pre-market up 9.82%, building on yesterday afternoon's momentum. Do not get vertigo. That is the message from UBS. Stay invested at these highs. Again, making a second day of record highs on the U.S. equity markets. To the rest of the markets, this is what we've got on that stimulus policy from China. You're also seeing a narrative pump up the volume on iron ore, the bid there to stimulate the Chinese economy, even though inventories are piling up. Singapore iron ore up by 2.25%. Yields give back a couple of ticks this morning. You are just seeing the dollar heading for its biggest drop of 2024. As yields just tick down ever so slightly, are the yield hunters returning to the bond market? That is the mood in the market. Let's talk about the stimulus, the quality of it, the size of it. Justina Lee is with me for Bloomberg. So, Justina, in terms of this effort today, yesterday was about a sticky plaster on sentiment. Today is about growth.
Right, exactly. And it's pretty unusual, even for Chinese policymakers, for the central bank government to actually come out there and pre-announce this reserve requirement ratio cut, which would be 0.5 percentage point. And they're forecasting that to release about $1 trillion into the economy. And I think that just kind of goes on to show how kind of worried Chinese officials are at this point about the sentiment in the market. And it's kind of interesting that we saw a bit of a mixed reaction. We did get a bit of a bounce in stocks, but not as much of a reaction in terms of like the currency or bonds. And I think part of that just shows how nervous investors are at the moment.
You talked about the rebound in stocks, Justina, but is this enough? Because there's still a lot of disagreement whether you jump in now, they've sold off enough, or if it's just catching a falling knife.
Yeah, and I think there are a lot of people out there warning investors that, yes, those valuations look low, but don't be tempted. And I think that's because, like, you know, there have been many times over the past year when people have said this is the bottom, and it was never the bottom. And I think that really underscores kind of the difference in magnitude of the economic challenges that China is facing right now in terms of, you know, the downturn in the property market, maybe the sense that you can't really just pump stimulus into the economy anymore. So I think what investors are probably kind of thinking right now that is you do need more, and you do need kind of more kind of consistent guidance from the government, and more in the way of, you know, maybe a change in economic policy or even more stimulus.
Yeah, well, it depends which piece of research you read. If you look at Schroders, Rémi Poutin says, tactical lift, it makes the country's assets a structural climb, but that could be the incentive to reduce your exposure further. So take your opportunity. Okay, Justina, thank you very much on the stimulus. Danny's having a languid time in Cannes. I'm here freezing. Let's talk about Netflix. Streaming service. It's reported its quarterly numbers, the biggest customer gain since the start of the pandemic.
We're really thrilled with our engagement trends domestically and globally. Our engagement is a bit impacted by our paid sharing. Think about it like fewer households using the same account. So as those folks spin off and get their own accounts and we win them over with our programming, that will normalize and continue to grow.
Well, it's all hell. Netflix looks like the stock's at a 2-year high. Alex Webb is with us. So these numbers, the ads, where were the biggest gains? Because it was beyond borders, so to speak, outside of the United States of America.
Yes, they beat expectations in almost every region, adding more than 5 million customers in Europe alone. The expectation had been for globally the increase to be about 8 million customers. In the end, it was 13 million, more than a 50% beat. It seems as though the reason behind that, as the company itself pointed out, partly, of course, this password sharing crackdown, which makes it a little bit harder for people with considerably different IP addresses to share passwords over an extended period. That's made a difference. We've also got around the edges the push into advertising, where they've now got about 23 million subscribers on the advertising supported tier. It's a bit less than 10% of the total, but it's still there driving some of the gains. And finally, of course, never underestimate the content. They have had a few big hit shows, things like Leave the World Behind, and of course the David Beckham documentary. All of those things are contributing to this significant beat.
Yeah, I still need to see that one. That's on my to watch list when I fly back. But Alex, we also got earnings from ASML, and that was a huge quarter too. Earnings more than tripled. Bloomberg spoke to the CEO. Take a listen to what they had to say.
We see the first positive signs of recovery. So at the beginning of the year, we'd much rather be a bit conservative. But as you also saw, had a record quarterly order intake, which also bodes well for 2025 and perhaps the back half of 2024.
So to be clear, this semiconductor market has now bottomed.
That's what we believe. We see the positive signs.
ASML has strong earnings. TSMC, Alex, not that long ago, also posted strong earnings. Is the chip industry back? Is recovery in?
Well, it certainly increasingly looks that way. If ASML thinks so, and they are very much the leading bellwether for this stuff. If people think that there's going to be demand, they order more of ASML's machines, and then we start to see the output appear in maybe a year, 18 months, a little bit further time frame. So it's good news for the chip industry that ASML sees demand starting to tick up. And of course, the scale of the beat was, again, quite considerable. The market was looking for orders in the order of 15 billion euros. The actual number was closer to, well, it was in excess of 20 billion euros. So it's all heading in the right direction. You never know with the chip industry where there might be a few bumps in the road along the way. And all it takes is a few geopolitical problems, some supply chain bumps, and things get thrown out again. It is very much a sort of concertina effect you see in the chip industry. If oversupply or undersupply then leads to oversupply as people bring more capacity online. As there's oversupply, then there's a retrenchment. So it seems as though we're back into the upcycle. We'll have to see how long that lasts.
Yeah, depends, of course, where the geopolitics plays out as well. And China front-loading their orders at this stage. Maybe they're getting ready for something a little bit different in America. Bloomberg's Alex Webb on the tech narrative. Let's take you through the other stories that are trending on the Bloomberg terminal this morning. Donald Trump beats Nikki Haley to win the New Hampshire primary. Increasing chances of a rematch with Joe Biden. Haley vows to fight on. But the loss raises the questions about how long can she stay in the race. A Russian military plane with 74 people on board crashed near the Ukraine border. It's carrying 65 Ukrainian prisoners of war. It wasn't immediately clear what caused the crash. The aircraft came down while transporting the prisoners for an exchange. Alaska's CEO told NBC that the carrier found loose bolts on, quote, many of its Boeing 737 MAX 9 aircraft. That's after the mid-air blowouts on one of its planes earlier this month. The FAA says it may expand its Boeing probe beyond the MAX 9. Bill Ackman and his wife have bought a 5% stake in the Tel Aviv bourse. This marks one of the highest profile investments in Israel since its war with Hamas erupted. Coming up on the show, another victory for Trump as he inches closer to the GOP nomination. We go live on the ground to New Hampshire. Up next, we're back in Cannes with Danny, an interview with a private equity deal maker. There you go. Coming up on Bloomberg.
this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Brief. I'm Danny Berger in a very beautiful Cannes, making Manus Cranny jealous, who is in a very cold New York. Welcome to the program. I'm here in Cannes at the IPEM Private Capital Conversation. I'm very pleased to say that joining me now is someone who comes from a titan of this industry. It is, of course, Francois Jeffignon. He is the head of expansion and a member of the executive committee at Ardian. Francois, thank you so much for joining.
My pleasure.
Not a bad backdrop to be having this conversation. But now I need to get into the grim. Here's the fun fact I have for you that's not so fact. So it's the first time in 10 years that deal making in 2023 missed the $3 trillion mark. It was the lowest value of deals since 2013. That does feel a bit bleak. Is this year a year of normalization, or is it another slog?
Well, when we look over 2023, indeed, there was a decrease of M&A activity, and that's because I think many people, the main theme was going on to flight to quality. So many investors chasing assets that were both resilient and growing. I think this year the theme is going to be more or less about the same. Still, I expect that the gap between what buyers and sellers are expecting on each side for assets that are maybe less resilient or less growing, I think that should narrow, and that should help probably towards the second half of the year, so that M&A activity should pick up. So I think it's a positive trend this year.
What narrows that gap? What is everyone waiting for?
I think there will be pressure ultimately from LPs. One of the main themes this year is that they are looking for cash. So I think many GPs have postponed these exits, but I think at a certain time, especially given the challenge of fundraising for some of them, they will have to sell their assets. So I think that's going to make the M&A activity pick up.
Until then, how hard is it today, right here, right now, to exit an asset and get the price you want?
I think there are two ways to look at it. It's like the sky. There are clouds, but there is always the sun behind it.
Poetic.
So I think what's important is to have made investments in the right way. At Ardian, we always want to invest in mission-critical companies. Why? Because in the case of a downturn, clients will still buy, and in the context of inflation, which was a big topic over the last 2 years, companies are able to pass on price increases. If you have these two characteristics, the market is still intact and there are buyers. We made exits last year. We are still going to make them this year. We have a lot of these portfolio companies, so we are optimistic.
I want to ask about a specific asset, and to be perfectly candid, it's top of mind for me today because I flew here from Heathrow. I know you took the train from Paris, but of course, Ardian has agreed to buy 15% of Heathrow, possibly looking at more. It's an interesting asset. How do you grow an asset like Heathrow Airport?
Well, first there is a trend behind the traffic, and I think on top of that, there are ways to optimize, especially on data, for instance, which is a big topic. So airports have many data that they can use, obviously in the right way. So on this asset, as you know, we have made an offer in November to Ferrovial. And as Ferrovial is listed, I am not in a position, as you would expect, to comment it further.
It does seem, though, that people are willing to sell some of their positions. I mean, I do wonder if you're concerned about the valuation of the asset, because some have said, oh, you've paid too much for it.
So, price is always an important topic, but is it the only one or is it the main one? We think that it is not. Obviously, you have to be disciplined, but the main point is to understand whether the company that you're looking at is, first, with a very differentiated business model, second, strong quality of management, and the last point is the potential for growth. Even if you pay a little high at the beginning, but there is so much growth, more than double digits, very soon the valuation will decrease, and therefore you still make good returns.
Well, Francois, I'm going back to Heathrow later today when I fly back, so I'll give you some notes about where I think you can grow and what can be done.
Glad to hear that, yeah.
Look, Francois, I have to ask about this because the FT at the end of last year had a really biting article that Ardian isn't prepared for succession. Do you get a lot of questions about that from investors? I'm sure you don't want to, but has it been overshadowing your work since that came out?
We're always happy to take questions. So let me answer it. First, Dominique Sénéquier, our founder, she has been the driving force of Ardian. She's the soul of this company. She launched it in 1996. People like me, we owe so much to her. We are grateful for all the help that she's bringing to the company, the energy. So today, she's founder and CEO. There is no succession. When it comes to governance, which is a different topic, a new COMEX has been put into place. A new general management team has been nominated. And I think it's quite similar to what we see in other successful companies. So I think we are ready for the next...
You're not worried about a succession plan or anything
we are
like
not.
that? It's also a difficult environment for fundraising, but I know Abu Dhabi participated in one of your more recent funds, $6 billion. How critical is money coming from the Gulf right now?
We have always wanted at Ardian to be very, very diversified in terms of profile of investors, and that's true from a geographic point of view. So the good point is that you're not dependent on cycles, and that's what we don't want to be in. So that's a good way today to have very loyal customers. Of course, the Gulf is on a top priority these days, but that's part of the relationship that we have on long term with all our investors.
Okay, Francois, we're going to have to end it there. Thank you so much for joining. It was wonderful to speak with you. I'll let you go off and enjoy, the sun behind the clouds, as you put it. Francois, thank you so much. That's Francois Jeffignon, head of expansion at Ardian. And the conversations continue later in the program. I'll be speaking to the co-CEO of Eurazeo. Stay with us here on Bloomberg Brief.
tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S. and it's a safe bet that some of them will eventually find their way to the C-suite.
DOJ or other authorities
could face bigger challenges. Britain's next.
It was going to keep Rain World Cup. This is a 3
As the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
You later got asked to be the head of USAID.
I got that job when I was 36 years old.
36 years old, you're running USAID. How many employees does it have?
We had 11,000.
And did you feel qualified to run something that big?
I did until, the work started.
When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already early to stimulate growth.
The ECB decides. Thursday on Bloomberg Television.
It's Bloomberg Brief. I'm Menace Crenny in New York. Danny Berger is on special assignment in Cannes, chasing the investors of private equity in terms of valuations. But we've got a few other stories to run through, Danny. And of course, this is going to present opportunities as well in the world where you are. Tech is really going through some big adjustments. SAP up the most in 3 years. This is the biggest software company, cutting 8,000 jobs. But again, it's about that pivot towards AI.
Right, and I find this really interesting because it's another story yet again where AI is being associated with job losses. I was actually talking to someone here from InvestCorp who said that they can use AI to do modeling now. They don't need those entry-level jobs of people doing that. Manus, they're coming for my spreadsheets. I'm not going to have to build an Excel model in the morning. I don't know what I'll do with myself.
But it's about this inflection point between, are you cutting jobs to cut costs and deliver operational margins? They reckon that it's going to cost them about $1 billion over the next 2 years, but then it's about expanding, it's about reinvesting, and they don't expect to reduce the total workforce. So it's about a rebalancing act, really, isn't it?
Yeah, it certainly is, and that's something investors want to hear. They also want margins to come in. I mean, at least for tech, margins are already much thinner than much of the industry, but of course, Manus, we also learned of other tech job cuts coming from eBay as well.
Yes, so when you pivot to the eBay, just look at the sort of 60 big tech companies in the world. They've cut about 11,000 jobs, a lot of them on the West Coast. So again, tech leading the way. It did last year, Danny, in terms of the job cuts. eBay is going to cut 1,000 jobs, 9% of its full-time workforce. And of course, it did 4% of its workforce last February. So this is, this is tech trying to get out ahead, isn't it?
Yeah, it really is. I mean, it's tech and banks where we've seen that.
Okay, we're going to talk Trump and his victory in New Hampshire.
The shape of the On athletic shoe is unique. It can't be mistaken for any other brand. The structure of ON's C-suite is just as distinctive, starting at the top with a pair of CEOs.
What we realized very early on is if you're adding different capabilities to each other and you do that as equals, then this leads to better outcomes.
Mark Maurer joined ON as Chief Operating Officer in March 2013. Martin Hoffmann arrived as CFO that July. In 2021, they jointly assumed the CEO role.
We are a brand that needs to be excellent in designing product, in innovating product, but also in shipping millions of parcels from A to B in the most efficient way. So we need to have very different mindsets and very diverse people. Mark has different strengths, I have different strengths, and if you take us together, you just get more.
Companies with co-CEOs are rare, but ON's configuration is even more unusual. Martin Hoffmann also holds the CFO position. He says his two jobs complement each other.
I actually feel the CFO makes you a better CEO, and the CEO makes you a better CFO. Understanding what you build as a CEO helps you to understand your numbers, and understanding the numbers helps you what are the right things to build.
Welcome to Bloomberg Brief. I'm Manus Rennie in New York. Danny Berger in Cannes, speaking with the leaders of private equity. Here's what you need to know. Donald Trump beats Nikki Haley in the New Hampshire primary, increasing the chances of a rematch with President Joe Biden. China will cut its reserve requirement ratio for banks in early February, the bid to boost growth and markets. And in tech, Netflix surges on subscriber gains as ASML signals a revival in the semiconductor industry. All hail big tech. All hail Danny Berger in Cannes, having a beautiful backdrop to talk to the doyens of wealth. Good morning, Danny.
Good morning. Something feels so wrong, Manus, about talking about, is there going to be a recession? Do banks need to get out in front of rate cuts while there's like a dozen yachts behind me? Something about it feels a little bit inappropriate, I'll be honest. But Manus, I just have to say one more thing to make you jealous. I had 2 croissants for breakfast this morning, 2 freshly baked, beautiful French croissants.
You see, they're real. They're the real McCoy there. But you know, those mini yachts behind you, they're mere bagatelle compared to some of the things you see in the summertime down there. Okay, let's set the stage. What is going on in terms of the size of deals that are getting done and the quality? That's what I want to know. A bit of news rather than the croissants.
Yes, making a little bit of news here. We've had our first person say that there could be a double-digit private credit loan deal. And this is why it's interesting. It is tied to this idea of quality, Manus, because this was David Hirschman of Premier Credit who said that you actually want the large cap deals. These are the companies that have cash, that have good balance sheets, that if we're for an uncertain economic environment, they'll actually do well. So bigger is better.
And then, of course, you have the other narrative as well, the competition. Private credit was just this beast that just kept growing. But the narrative this morning seems to be that the banks are snapping at their heels. That's got implications in terms of human capital and in terms of competitiveness, hasn't it?
Right. I mean, investment banking has been tough. Jobs have been cut there. But if they're getting into these leveraged loan markets once again, perhaps that's a good area for growth. Now, the other area of growth, Manus, we've been talking about it all day because it's tech earnings, is AI. And private markets, they want to get in on the action too. But I spoke with the head of Europe of InvestCorp, who warned it's a bubble. Take a listen, Manus.
A lot of venture has focused on AI because it is the hot topic, like blockchain was the topic maybe a year, 2 or 3 years ago. So, of course, there is an absolute bubble. But I think what's interesting is, like the quote I think is very relevant, it will have effects, AI, that is over the next decades. Like technology, I mean, it's not like disappeared when 2000 came and we had the crash. It actually, today, it's everyday's lives. And the same thing will be with AI.
Immerse, the conversations are going to continue in about 10 minutes' time. We're going to be speaking with the co-CEO of Eurazeo, that's Christophe Bavier. Eurazeo, of course, a giant in this space, a giant in European and French private equity, so really looking forward to that conversation.
Well, let's see, does he call any bubbles or not? Danny, we'll be back with you very, very shortly. Danny Berger on tour in Cannes. Snapshot of risk. It is about policy, reaction functions, and politics this morning. You don't want to get vertigo. S&P 500, again, careering through new records on U.S. equities. UBS say, don't get vertigo. Stay invested at the highs. Monetary policy bangs up the Hang Seng as China goes for a liquidity injection by cutting the triple or. That will inject 139 billion of new liquidity. Since November, the Chinese have put 3 trillion into this market. So you are just seeing a narrative of where Netflix is on fire. They're adding over 13 million subscribers. You've got tech on fire in Europe. ASML, the orders tripled there. Tech has added nearly 36 billion in market cap in Europe this morning. Roll it over and you'll see, again, the reverberations. There's ASML up 6.2% in Europe this morning. The reverberations of the China policy response come through in the iron ore market, despite inventories piling up 7% in January. The dollar drops by 0.3%. That is the biggest one-day drop so far this year, and yields give back a tick at the moment. With the former President Donald Trump is closer to grasping the GOP nomination, with Nikki Haley coming in a distant second place in New Hampshire. But the losses aren't stopping her campaign.
This race is far from over. There are dozens of states left to go. And the next one is my sweet state of South Carolina.
Okay, the New York Times is writing this about last night's primary. Tuesday night's results showed that the time is coming to sit Shiva for the Republican Party of the Bushes, the Cheneys, the Romneys, and that the donor class that once played an outsized role in shaping the party is now a desperate group of bystanders. Bloomberg's Gregory Corti joins me now from Manchester in New Hampshire. It's a very, very different Republican backing for Trump at the moment. Just dissect the evening's events, and do you think Haley will last till we get to the next primary?
Yeah, so just like in Iowa last week, we had a very early evening. Former President Trump wrapped up this victory in pretty short order, and just seconds after the polls closed in the last part of New Hampshire, the Associated Press called the race for Trump. It was a little bit closer earlier in the night, but it settled in at about a 10 or 11 point margin for the former president, and that's about half of what the polls had been predicting. So in one sense, it was a pretty good night for Nikki Haley. She did much better than she expected. But in the other sense, look, former President Trump has now won Iowa. He's won New Hampshire. Neither one of those states is essential, but when you put them both together, it would be almost unprecedented for a candidate to come now from behind and win. But now we're going on to South Carolina, which, as Haley said there in that clip, that is her home state, and so that's where she's hoping to make a stand. She seems to have the donor support
Greg,
so far, but we'll see how that keeps going.
On that point, Greg, I mean, I was looking at a 538 compilation of the polls, and it gave Trump a 2-to-1 chance of winning in South Carolina. As you say, it's her home state. If it looks unlikely for her to win it, why take the risk to her brand and reputation there?
Yeah, the decision about the timing of when to get out of a presidential race is almost as important, maybe more important, as when to get in. And one of the calculations is, what does she want to do? What is her political future? Has she already burned a bridge with Trump and decided that she will not be serving in a future Trump administration? That has motivated a lot of the candidates who have gotten out so far to drop out. We saw Vivek Ramaswamy. He talked to Bloomberg News from this very set last night and seemed to be open to an idea of serving in the Trump administration. Ron DeSantis now has mended with the former president. Haley, as long as she has the donor support, may want to continue. But yes, she is going to be looking very closely at those polls in South Carolina to see if there's a realistic chance that she can pull it off. It's more than a month. It's about a month away, and that's pretty unusual in the primary calendar to have that much space. So she does have some time to kind of reassess where South Carolina is after her performance last night.
Yeah, it's certainly going to be an interesting 30 days. And I think Trump said, if she doesn't drop by, this is what he said to Fox News, if she doesn't drop by, we have to waste money instead of spending it on Biden, which is our focus. So again, it's a question of whether it's going to be a short, sharp victory lap for Trump or whether Haley goes head-to-head with him. Gregory, thank you very much. Staying up late, getting up early. It's been a beast of reporting for you and the team. Well done. Gregory Corti there in New Hampshire. From the elections to electric vehicles, Tesla reporting their earnings later today after the bell closes with its 2024 deliveries in focus. Bloomberg's Craig Trudell joins us now. I just looked at BYD in China, taking the #1 spot. So the pressure is on for Tesla to deliver. What kind of number are we looking for, and where will the biggest buyers of Teslas be?
Yeah, I think the number that the investors are particularly going to hone in on tonight is going to be the profit margin at Tesla, and particularly automotive gross profit margin. This was a figure that when you back out the regulatory credits that Tesla sells at, essentially, pure profit, this was a figure that was around the 30% range in early 2022. It's now kind of hovering in roughly half that level, and that's really been a cause for concern, just the persistent price cuts that we've seen Tesla make to sort of sacrifice profitability for volume. There's been some willingness, of course, to tolerate that. We did see the stock perform pretty well last year. The question is how much longer that can last, especially if we don't see some stabilization in the margins, and that's something that's going to be the topic of conversation on the call as well.
Well, Craig, Tesla has potentially one less competitor to deal with. Bloomberg, of course, learned that Apple is now delaying their plans for self-driving features of a car. They're going to be delaying that launch. I'm going to be 100% honest, Craig. I forgot Apple was even planning on doing this. I mean, it does seem a little bit odd to their strategy, but what accounts? Sorry, what accounts for the delay here?
No, I don't hold it against you, because it has been the case that it feels like a good 6 to 12 months tends to go by between the latest update of what Apple's up to here, and I think it's not necessarily a surprise to see the company sort of put aside this ambition of a fully self-driving vehicle, even a self-driving vehicle in certain environments, because this has proven extremely difficult for everybody, whether you want to talk about Tesla or just all of these sort of incumbent car makers that 6 years ago or so were all talking about having driverless vehicles on the road at this time. I do think that there is some very interesting material in Mark Gurman's piece on this that I would encourage viewers to check out, because the idea that the company is kind of viewing this internally as a make or break moment. If we can sort of lower the bar for what this product can accomplish and get it out in the next few years, if we can't do that, then maybe we need to reconsider whether we move forward with this project at all. It's absolutely a fascinating story.
Craig, thank you very much. Great work by you and the team. Craig Trudell on the tech stories coming up. Danny has more from Cannes. You cannot get enough of it. The leaders of private equity sitting down, Christophe Bavier with Danny Berger in Cannes on tour on Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We're like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
This is Bloomberg Brief. I'm Danny Berger in Cannes. Manish Krani is in New York. Now, Manish, we are here in Cannes at the IPEM conference for private capital. We've been having a lot of conversations. I'm really pleased to continue the conversation now with the co-CEO of Eurazeo, that is Christophe Bavière. Christophe, thank you so much for joining.
Thank you, Danny.
I want to take you back to 2011, because in 2011, Eurazeo had a monster bet on Montclair. It was so successful. It ended up IPOing. Here in the year of 2014, what is your Montclair? What is your monster deal?
Oh, we have plenty of them. How many others do we have? Because there are so many, the beauty of what we can do. Eurazeo is a full specialist of mid-market companies all over Europe. And the beauty of Europe is that it's full of hidden champions like Montclair. People see it when we are exiting. The benefit of the expertise of our teams is to be able to identify them at the starting point. But there are plenty of them. We just exited some companies last year, which was obviously not easy. Maybe some less brand names than Montclair, but we have a lot of them that will be shown in the future years of Eurazeo.
It has been a strange couple years, shall we say. And to encapsulate it, Bloomberg spoke with Apollo, who basically said that people overpaid for private equity assets. And it is this year, end of 2023 and this year, that the air is starting to come out. Is he right that people overpaid and now that's starting to undo itself?
It's true that we have been through an incredibly positive cycle. We benefited from a very long period where debt was easy to get access to and incredibly cheap. This has influenced prices, no doubt. The environment is obviously entirely different now. It may be a little bit too soon to know if the price of some asset have been overpaid. What we need to focus on in what can you do right now to bring value to your portfolio companies. And this engine of the private equity industry, it's not broken. There are plenty of opportunities today to help your companies to grow. And if a price has been overpaid at some point, you still have time to compensate.
I mean, there are those who are struggling, and maybe as a consequence of that, consolidation is a very live topic in this industry. People looking for white knights. Would Eurazeo be that white knight? Would you be interested in doing a transformational acquisition?
We are much more interested by joining forces by people that are looking to grow faster, to be stronger, to be more international, than to be the white knight of some competitors that needs to be backed. That's definitely, and there are plenty of ideas. The industry is full of opportunities.
Well, the French press was reporting that you're looking at Astorg. Is that just wrong then?
You see, it's we don't comment, but there are so many opportunities, so many ideas. And again, there is absolutely no hurry. You know that we just clarified our strategy. We want Eurazeo is a clear leader in the mid-market all over Europe. We want to stick to this. We want to accelerate in this direction. And obviously, just after announcing a strategy, we are not in the process of finalizing anything.
Right, and to that point, I mean, strategy has changed, and it was a tumultuous year. Virginie Morgan left after shareholders pushed her out. You became a co-CEO. There were concerns about departures. Where are you now in stabilizing the ship?
It's behind us. It's done. We have been obviously working a lot on stabilizing, obviously, teams internally, on stabilizing our interaction with our LPs and with our portfolio companies. But this has been done largely during the first half of the year, and we are back in business. We were back in business during the second half of the year, and definitely for us, 2024 is a year of acceleration.
I have a quite biting quote I want to read to you. It's from a Bloomberg opinion writer, Lionel Laurent, and he had this to say when the transition happened. As flawed as Morgan's tenure was, its end signals that private equity remains one for the boys and the billionaires. Is Eurazeo, and even private equity as a whole, is it still too much of a boys' club?
Well, things need to get better, and we are working a lot. I mean, not only us and the entire industry on it. But when you look at, for example, the proportion of women in our executive committee, it has increased. It is now close to a third. Is it the final step? Are we satisfied by that? Obviously not. Do we still have hard work to do to better include women in our top management? Yes. But the message cannot become only on one single person in the industry. The entire industry needs to continue to improve its standard on this, and we are doing it.
Speaking of the hard work to do, the ECB has been pushing back a lot about rate cuts. Everyone thought that they would come early this year, and last week in Davos, basically every ECB policy member said, we're not over-eager to do it. Are there those who are going to be in trouble in this industry if rate cuts don't come this year, that they have just been extending and waiting for that moment for cuts to happen?
I think it's obviously important. Rate cut obviously improves the general macroeconomic environment. But our industry needs also to concentrate on the old recipes to bring value, which is not only to bet on cut rates, it's definitely to also work a lot on your portfolio companies. You know, and especially when you are working in the mid-market, and you were kind enough to remind that the European market is full of hidden champions like Moncler, but when you work a lot with the real source of outperformance are in helping your company to improve their operations, to improve their productivity. The European market is full of buy and build opportunities as the European industry needs to consolidate. And last but not least, mid-market companies, you can help them to accelerate internationally. So to a certain extent, what needs to be done in our industry today is to go back to basic, and not only to bet on significant leverage, not only to bet on the fact that leverage can be cheap at some point of time. When I started, I'm becoming a veteran in this industry. When I started, you know, we were experiencing double-digit interest rates, and the industry was largely successful. So we need to go back to basics.
The days of financial engineering are basically over, it sounds like.
To a certain extent. There is still some very interesting values that you can bring by financial engineering also.
Okay, Christophe, we're going to have to end it there. Really wonderful to speak with you this morning. That is Christophe Bavier, the co-CEO of Eurazeo. Manus, I'm going to be honest, I was trying to get a Moncler for you out of Christophe, but maybe next time.
Just get a discount card. We're fine. We can have a discount card. We can share. Danny, great conversation.
There you go.
There you go. Great conversation, and more of them to come. Danny Berger in Cannes. A quick snapshot of what is the reaction function in markets this morning to policy in China, which obviously has moved on the yuan, but we've got the dollar down there by 1/3 of 1%. Biggest drop of 2024. Sterling is actually up because you've got nice high PMIs, the highest in 7 months. Traders paring back their bets on rate cuts in the United Kingdom to less than 100 bips for 2024. And the euro, obviously, is just a reaction function of the dollar. Obviously, the PMI is coming in there, showing the ECB has a little bit of time on its hands to react. The PMI survey can allow the ECB maybe to delay in their attention to cuts. 47.9 for January, up from December's 47.6. Coming up, we'll take a look at some of the market-moving events on Bloomberg.
Buffett is somebody you've met and you know. What does he tell you about investing? He tells you to just do what he does, or what does he tell you?
Pretty much. I mean, one of the things, we have this great connection about the love for baseball. And the reason why Warren and I got to know each other is he insured my contract, the 252. I reached out to him and I said, Warren, now that we're business partners, maybe I can come see you in Omaha. I thought I would never get an email back. And Debbie, who's been with him for over 40 years, wrote back and said, how's October? I said, I'll be there because we're not going to the playoffs. And that led a series of 5 or 6 years where I go back to Omaha. And he said, Alex, you always want to be a gentleman. You want to be a great baseball player. And then the 2 rules of investing are, 1, never lose money. And number 2, don't forget rule number 1.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Brief with me, Menace Cranny in New York, Danny Berger on special assignment in Cannes. Quick snapshot of what's ahead today. US PMI will hit the tape at 9:45 Eastern Time. Plus, Bank of Canada out with its rate decision at 9:45, followed by Governor Macklem's news conference. And we get the Tesla and the IBM earnings after the market closed. Danny, that's as BYD takes the #1 crown in China in terms of EV sales. But you had a real sort of stage setter of how the rest of the year looks for private equity. Top thought?
Yeah, I mean, look, the theme to start this year really has been cuts aren't coming as soon as we expected. And for this industry, for those who are over-levered and paid a high price, perhaps you're in trouble. We were just speaking with Eurazio Manis, who said, look, you need to be prepared for that. You need to get back to basics. It's about growing companies, not just valuations all going up because debt is cheap.
Okay, well, enjoy the rest of the day. Keep your hands off those croissants. You can have a little bit of beef bourguignon later on, a glass of red wine.
No promises.
I don't know whether the expenses will stretch that far for you. Enjoy the day. Bloomberg Brief from New York and Cannes. Surveillance is up next.
like to kick off with a very simple question. Has the whole Brexit process been messier, less messy, or as messy as you expected way back in 2016?
Was it as messy as we thought it would be? Probably was, and I tell you why, because of the fundamental mismatch between, if you like, rational policy in the UK and what was, in a sense, performative ideology in the UK. And I think that was the problem. We could have had the deal, the so-called Windsor deal, several years ago, but the Johnson government simply did not want a deal on those terms.
But I think for the short to medium term, the next 3 to 5 years, the Brexit will be net negative on the UK economy, no question about it. What happens over the longer term depends on what the British establishment or the future UK governments do. One, I do think ultimately they will finish up in the next 10 or 15 years putting some kind of, I call it a trade deal with Europe similar to Norway or Switzerland. I disagree with Declan. I think they will pay into a European budget. I think they will have no choice. It is too big. The fundamental strength of the single market is something that is too attractive for the UK economy to be excluded from.
Maybe the messier part is yet to come.
Soft landing right now. We're looking at the data. The data looks strong.
Look at the data. It continues to surprise to the upside.
That even if the activity side of the economy is doing well, as it is, it's really the deceleration in inflation.
It's actually not that easy to get inflation down that quickly. It's going to take more time.
As we get into this year, I think a big stepping back thing is that we're going to see what kind of economy we have.
This is Bloomberg Surveillance with Jonathan Ferro, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, this is Bloomberg Surveillance alongside Lisa Abramowitz, together with Anne-Marie Hordern. I'm Jonathan Ferro. 4 days of gains on the S&P 500, 3 consecutive all-time highs. Breaking news overnight, Trump on the cusp of clinching the GOP nomination. The votes going his way in New Hampshire. 91% of the ballots counted. Here are the numbers. For Haley, 43.2. Bramo for Trump, 54.5.
This is completely expected. Let's just put that out there. Everyone expected Trump to probably win. The question now is, does Nikki Haley drop out, given that she had a pretty victorious losing speech while we heard from Donald Trump a sort of fiery, angry winning speech? So here's the question. What's next, and what is Nikki Haley's role if she basically has no path to become the nominee?
Well, she came out and she said New Hampshire is the first in the nation. It's not in the last. She has some money. Before New Hampshire, she even started to spend in South Carolina. But if you look at the South Carolina polls, it looks like she is going to be embarrassed in her home state. So there is this potential, but she also might just want to hang around if for some reason Trump could not run in November.
Okay,
she got some delegates last night.
This, to me, is one of the most interesting aspects of all of this, the hope and the dream that it's something other than just a matchup between Biden and Trump. I just want to point this out. With more than 3/4 of the vote in, more than 2 in 5 voters voted for someone other than Biden and Trump. People don't want this matchup based on the voters. So the question is, what could interrupt that?
They don't want that matchup. What Joe Biden is going to say when it comes November, he's going to say what his father has always told him. Joey, don't compare yourself to the almighty. Compare me to the alternative. And that is the Democrat hope. People will get into that voting booth, hold their nose, and once again vote for Joe Biden instead of Donald Trump.
Is that a pitch from Joe Biden? Is that what he's
Not
going to say?
officially.
Joey? It certainly sounded like Joe Biden. That was a decent impersonation. If politicians, if we're down to 2 and the electorate's deeply unhappy, dissatisfied, Bramo, markets right now don't care. Equity futures are positive again on the S&P 500. Check out shares of Netflix. Juicing the move higher in after hours. These numbers, the best quarter of sub-growth since the pandemic. They beat projections in every region of the world. The ad-supported tiers picking up. Bramo, the password clampdown is paying off. We're up by 9.6%.
People are wondering, is there anything underneath this incredible rally that we've seen in the Magnificent Seven, and we're seeing inflows into it? Here's the thing, the profits are there. they're able to deliver. And you could say Netflix, whether it was content, we heard that yesterday, whether it's just the fact that they have such a critical mass and everybody's tied to their phones, but the fact that they were able to add the greatest number of subscribers to the heart of the pandemic, when all of us were looking for any screen possible to potentially hook our kids onto so that we could have.
Do you know what's under it? At least what I think is under it? David Beckham. That documentary came out in the last quarter. Even my parents sat down, watched it, and my mom said, I'm gonna get a Netflix account. She's not gonna try to get on my password sharing. She got her own Netflix account. That documentary, honestly, fantastic.
Up by, what, by 9% this morning in the pre-market, at least for now. Down to David Beckham, as apparently, according to AMH this morning.
And Victoria.
The broader market on the S&P 500 is shaping up as follows. Equity futures look like this. We are positive, Lisa, by, let's call it 21 points on the S&P, up by 0.4%. Yields coming in 3 basis points. On a 10-year in America, 4.10. I have to tell you, the JGB market looks very, very different to what you see in treasuries today. Yields up in Japan. We're talking about rate hikes all over again.
People are expecting them to actually make that move, and we heard that with the Bank of Japan, maybe indicating they were prepared to shift some of their strategy. But here's the thing: people have been expecting this a long time. I think the sort of common feeling is April is when they're going to abandon negative rate policy, and so maybe you'll get some kind of action in JGBs.
Coming up in the hour on this program, this is the lineup for you. Chris Morangi of Gabelli Funds on the market rally, Bloomberg's Katie Lyons on Trump's decisive victory in New Hampshire, and Mandeep Singh of Bloomberg Intelligence on tech earnings. All of that still to come. We begin with our top story this morning. The stock market rally continues with tech earnings underway. Netflix posting its biggest subscriber gain since the pandemic. Chris Morangi of Gabelli Funds saying the pressure is growing for media to merge and compete. Writing, quote, the march from analog dollars to digital dimes continues. Media's industry structure will never be as favorable as in decades past. Chris Morangi, co-CIO of Gabelli Funds, joins us around the table. Morning, Chris.
Morning.
Is it going to be bad for industry and bad for consumers too?
Well, I don't know how it shakes out for consumers. We're going to need consolidation. Netflix, the quarter that they put up, shows that scale matters. We used to talk about the insurgents versus the incumbents. Netflix is now an incumbent. They're clearly the global leader in streaming, and they are able to flex that muscle and adding subscribers and doing the deal that they did yesterday with Raw. And the rest of the industry, the former incumbents, are going to need to follow.
So does this mean that you expect Netflix to acquire someone?
Well, clearly, they didn't need to say it, but they said in their letter yesterday that they don't intend to acquire any linear programming companies. That's not a surprise. They're not going to do that. They're going to add content. But it's really the former incumbents, the linear companies, are probably going to need to rationalize the mess of streaming services that we have out there. And that can happen through consolidation. That can also happen through partnerships.
Okay, so let's just sort of break this down from your investor hat. Where do you lean in and where do you lean out? How do you play this if disruption could potentially be really profitable?
Well, first and foremost, we like the IP owners, those who own the content themselves. And those are hard to find. One place we found them is in sports. The owners of sports properties, demonstrated again by the WWE deal yesterday. This is the content that people want to watch, that advertisers will pay for. And so that's first. Second, we're looking for some of the undervalued media companies. I mean, you look at Warner Brothers Discovery or even Paramount. Netflix today is added the entire enterprise value of Paramount, which is $22 billion.
Can we pick up on the sports deal first?
Please.
And get to sports. It's tough for the media companies when they have to lease the asset and they don't own it. ESPN is clearly a struggle right now. Disney doesn't seem to know what to do with it based on the last 10 years or so. What does that look like in years to come? They've paid up big time for some of these assets. They don't own them. Are we getting to the point where maybe we've reached the limit on the price of that asset?
Well, again, Netflix paying $5 billion over 10 years for WWE, which is arguably a sport, arguably not.
Kind of.
I think is an indication that sports rights values are continuing to go up, and they're going to go up. And you have the tech companies are going to be players. I think you're going to have the leagues as players too. The MLB, I think, has a vision of owning some of the streaming services themselves. Perhaps the NFL or somebody else gets involved in ESPN. We'll see. But I would expect the big tech dollars to start flowing.
Can I just set the record straight? There's no way that WWE is a sport, because when you have a predetermined outcome, it is pure entertainment. I just want to say that. So just set the record straight.
You have them involving soccer closely enough, apparently.
I will say, though, when you look forward at exactly how this evolves, how do you understand whether you're really investing in a company for the quality, for content spend? Remember, everyone was worried about too much content spending versus sort of the winner-take-all kind of thesis.
Well, again, it all comes down to price and what do you pay. Netflix obviously is a phenomenal company. They're going to have tremendous growth over the next few years. It's trading at 30 times EBITDA, something like that. Is that a price that you want to pay? Is there a margin of safety to be able to own Netflix at these prices? For somebody like us, that's hard to do. You know, Warner Brothers, Paramount both have their challenges. They're trading at, you know, call it 5 or 6 times EBITDA. And so there's a lot of opportunity if they're able to get the model right. So that's the balance that we weigh.
Will we see more of sports teams or venues take on the distribution like MSG or Yes? And then it goes to the fact that the sports team needs to be pretty relevant and popular for that to even work.
Yeah, and again, you're seeing signs of that. You had in baseball and basketball, Diamond Sports go through bankruptcy. Amazon is potentially investing, recapitalizing that. So, you know, I think that the teams are certainly interested in viewership and gathering eyeballs and in making money, and perhaps that means taking ownership stake in the media rights.
Could potentially Netflix ever be one of those destinations?
Well, interestingly, Netflix talked about being in sports-adjacent properties, not sports properties, and I think they put that in there specifically to note that they're probably not going to be a bidder on the next big media sports property, which is the NBA later this year.
You mentioned this at the start of the conversation. Let's try and finish there. Are we building a model that consumers dislike and companies struggle to make money with?
Well, I don't know. Are consumers happy today? There's more content than ever before.
I'll speak for myself.
It's harder to find.
Deeply dissatisfied that I have about 8 different apps and I'm paying $10 for each of them.
And the industry is very well aware of that, and I think there are ways to fix it, including consolidating streaming services, also bundling streaming services. We're going to have a reaggregation led by the cable companies, where you, as part of your broadband service with Comcast or Charter, you get a box that puts all this stuff together.
Back to a bundle.
Search it.
Yeah.
Back to the bundle.
Bramwell, Back to the Future.
This is basically what we heard, right? What's the new model? It's the old model. And that's where we're heading. And that's what everybody has been saying for the past, I don't know, 18 months.
Any idea of what the price point on that looks like?
Well, it's probably cheaper than the big bundle, but not as cheap as you think it would be.
So the broadband providers are going to be the ultimate winners, and they're going to have to consolidate the whole thing.
Well, the broadband, we've always talked about the broadband hedge, which is you need broadband to do any of this.
Sure.
And in most of the country, that was the cable company. Over the last 18 months or so, you've seen wireless take share, and that's been the issue with the cable companies. Comcast reports tomorrow. We'll see how many subscribers they lose to the fixed wireless operators.
And Netflix this morning, up big time in the pre-market. Chris Moranki of Gabelli Funds is going to be sticking with us. Your equity market on the S&P 500 right now positive by 0.5%. Let's get you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Hackers. Hey, Yahara.
Hey, John. Former President Donald Trump has taken a decisive win in the New Hampshire primary, all but guaranteeing a 2024 rematch with President Joe Biden. Trump took 55% of GOP primary votes, with 75% of ballots counted, comfortably beating his only remaining challenger, Nikki Haley. The former UN ambassador has vowed to stay in the race and now looks to her home state of South Carolina for support in the February 3rd primary. Chip maker ASML saw orders more than triple in the fourth quarter. Demand for products from Europe's most valuable tech company increased, especially for its state-of-the-art lithography machines. CEO Peter Wanenk emphasizing the company's role in the AI frenzy.
One thing is absolutely sure. It's going to need massive amounts of compute power and storage, data storage. So I think without ASML, without our technology, that's not going to happen. So it's very clear that it's going to be a big driver going forward for our business and the business of our customers.
And Europe's top economies are seeing a tough start to 2024. PMI data shows private sector activity contracted for an 8th month, with Germany and France in particular seeing bleak results. The data comes a week before the euro area is set to report GDP, which will likely show recession. Meanwhile, UK PMI data shows inflation worries have returned thanks to the conflict in the Red Sea. Private sector firms reported the sharpest jump in costs in 5 months. That's your Bloomberg Brief. John?
Yahara, thank you. Coming up next on this program, Trump cruising towards a rematch with President Biden.
This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
This race is far from over. There are dozens of states left to go.
That's coming up next on the program, live from New York City this morning. Good morning.
Igor, tell me.
Listens next.
Was going to keep reading World Cup. This is a 3
as the economic picture.
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When will the ECB decide to cut rates?
We are on the right path, but I'm not going to shout victory.
Bloomberg Television brings you the breaking news and detailed analysis after ECB President Christine Lagarde's press conference.
The wages issue is what I think the ECB is really focused on.
June is our base case.
There is still a 50-50 chance of a rate cut coming just slightly before that.
In many ways, they should have been cutting already early to stimulate growth.
The ECB decides, Thursday on Bloomberg Television.
Live from New York City, here's the price action on the S&P, higher again by 0.5% on a 4-day winning streak on the S&P 500, the longest winning streak of the year so far. Yields lower by 2 basis points on a 10-year, 4.1051. Under surveillance this morning, Trump cruising towards a rematch with President Biden.
You know, we won New Hampshire 3 times now, 3. This is not your typical victory speech, but let's not have somebody take a victory when she had a very bad night.
New Hampshire is first in the nation. It is not the last in the nation. This race is far from over. There are dozens of states left to go.
Here's the latest this morning. The former president defeating Nikki Haley in the New Hampshire primary. Trump claiming victory by 11 points with over 90% of ballots counted. Haley trailing by over 30 points in polls heading into the primary in her home state, Anne-Marie, of South Carolina next month.
Yeah, it's pretty rough when you look at this polling, Jonathan. We put the aggregate together with 538. Trump is averaging 62.2%. Haley is averaging 25% heading into what she said her sweet home state of South Carolina. And then you look at the endorsements in South Carolina, whether it's the governor, lawmakers in Congress, or statewide officials. Donald Trump has 13 in his camp. She has 1.
Steep hill to climb. Kelly Lyons joins us now from Manchester, New Hampshire. Kelly, let's talk about that. What's the argument for Nikki Haley to stay in the race?
Well, what Nikki Haley will tell you, John, is that South Carolina is her home state, that she intends, with the ample resources at her disposal, to put up a good fight there, and that actually, looking beyond that South Carolina primary on February 24th to Super Tuesday, that we should all keep in mind 11 of those 16 states and territories that vote on that day have open or semi-open primaries. The thinking being she could potentially attract independent, maybe former Democratic votes in those states. The thing is, in New Hampshire last night, where the base of voters is significantly more independent and moderate, 40% of those registered here were undeclared voters, she couldn't get it done. So how could she get it done in these other states, especially in light of what could be intensifying pressure on her to drop out of this race, not just from the MAGA base that, of course, is very present in South Carolina. She could face a lot of attacks from Trump and his allies, but even establishment Republicans are now lining up to say we should all fall in line behind the presumptive, at this point, nominee Donald Trump. Big leaders in the Senate, for example, in addition, of course, to the other endorsements that Trump has gotten from previous candidates in this race, like Senator Tim Scott of South Carolina. So it definitely is going to be an uphill climb, and a lot of it could depend on whether or not big money donors continue to back her. Keep in mind, guys, 4 days from now, where you are in New York City, a big fundraiser is going to be had for Haley, held by the likes of Ken Langone and Stanley Druckenmiller. To this point, a lot of these big Wall Street donors have still been backing her. The question is, will they continue to throw good money after potentially bad if she continues to languish behind Trump in polls in future contests?
Yeah, we'll have to see if the donor class continues to shore her up following this loss in New Hampshire. But Kaylee, as we look to this general election, the one that Lisa continues to say, it's the one that no American really wants, according to the polls, the Biden campaign last night issued a statement that seemingly felt like they were eager for it to be Trump.
Well, and that's what we thought all along, that along that actually of all of these different Republican candidates, of course, now there's only 2 left, that Trump was the preferred outcome for the Biden campaign because Biden has beat him before. He did so in 2020, and at least the campaign believes that he has the ability to do it again. Biden put out a statement last night saying that it's clear that Trump is going to be the Republican nominee. He said his message to the country is that the stakes could not be higher. Our democracy, our personal freedoms are all at stake, and that really is how he is trying to characterize this race moving forward, as something fundamentally about the future of American democracy and the threat that he says Donald Trump poses to it. Keep in mind, though, guys, that in the states that ultimately could decide this election, when we're looking at the Electoral College, it's the swing states that are going to matter. And in most, if not all of those, when you look across polling, Trump is currently leading Biden in them. Of course, it's a long way to go. This would be one of the longest, if not the longest, general elections in history. If really it does begin now, the vote is still more than 9 months away. But really, Biden is hoping that it is going to be a rematch with Trump here.
Haley, I have to wonder, there's a lot going on or should be going on down in Washington, D.C. amid this sort of drumbeat to November. And there's a question of whether we're going to get budgets passed, about funding to some of our allies. I'm curious, Kayleigh, what the increasing acrimony, both with respect to this race, but also in the House, how and the Senate, frankly, how Donald Trump becoming the leader now really plays into that.
Well, he already has been the de facto leader of the Republican Party, if you will, as he has remained not just a former president, but really the leader and the presumptive frontrunner and ultimate nominee. But the real issue in Congress that translates into this election is on border security. Here in New Hampshire, as we saw in Iowa last week, in addition to the economy being top of mind for voters, the border was top of mind as well. And we know that the White House and Senate negotiators are still currently working on a package to try to tie Ukraine funding to a border security deal. The question is going to be what the fate of that is in the House, whether or not House lawmakers, of course, led by House Speaker Mike Johnson, who talks frequently to President Trump, has a very close relationship with him, are going to pass a bill that could potentially be a political win for Biden, knowing that he has a problem at the southern border. He doesn't pull well on that issue. If he actually were to be seen getting legislation across the line to try to address that issue, it could actually play in his favor and against the favor of the former president. So as this election draws closer and closer, it may be more difficult for Republicans to actually be handing the White House those kind of political wins. And we know that Trump already has weighed in on this. He posted on True Social last week that House Republicans should only accept a perfect border deal. And we'll be looking to see whether he continues to put that pressure on so that they don't ultimately get this done.
Hey, Kayleigh, thanks for the update. Kenny Lyons there in New Hampshire. With us around the table here in New York City, Chris Marangi of Gabelli Funds. Chris, political risk, something we all hear about, struggle to quantify, and then attempt to ignore. What do you do with it in 2024?
Well, I think the question is, when does Wall Street care? And arguably in 2016, Wall Street didn't care until election night, when famously, futures sold off and then we had liftoff the day after. I think there's 2 parts here. There's the actual conduct of the election. Are we going to have a concession speech the day after? Or is this going to be another extended affair? And then there's the policy risk and what policies are going to change. We're already seeing some ink spilled about what happens to the Biden IRA. I think if you're an investment banker or sitting in a boardroom, you're wondering, if I want to do a deal, do I attempt one now under Lina Khan, or do I wait for a perhaps more friendly Trump administration? So these are all things that we're thinking about. But yeah, I think Wall Street for the moment has enough on its plate. Just going to ignore that.
Let's do some scenario analysis and go through it together. We all remember that night in 2016. I was on air when the headlines were crossing on the Bloomberg terminal, and you started to see futures bounce. And futures started to bounce on that speech by President Donald Trump when he started to talk about infrastructure spending. That was the very beginning of what became the Trump trade over the next couple of months. We started to focus on the policy and not the volatility that comes with the man. Is it different this time around?
Well, I think it is different because we have 2 known quantities, if they're the presumptive nominees. I think the market, the knee-jerk reaction from the market will be positive toward Trump, with the belief that he will bring more pro-growth tax and regulatory policies. The reality is clearly going to be more complicated, but I'm not sure we get to that in November. That's probably more like a January type event.
Before we get to November, I am curious about whether you expect deal-making to accelerate or decelerate because of the uncertainty.
Yeah, well, we've seen an acceleration of deals. We've seen a lot of deals across a wide variety of industries in these first 3 weeks of the year. They tended to be small, made a lot of sense. Some of that is, I think, just pent-up deal demand as the financing markets have loosened up a little bit. We have a little bit more certainty on inflation and cost. So I think that backlog has to clear. But I don't know that anybody's going to attempt a really big deal before the election, because if you announce it today, it's probably not getting approved in time for the election to occur.
So investors may shrug off political risk in the United States at the moment. What about geopolitical risk? Every single day there is an issue in the Red Sea, and at some point, this is feeding into corporate bottom lines.
It is, and obviously the domestic and international inextricably linked. If you believed President Trump, he'd suggest that he would settle Ukraine the day after he gets elected. We can all question whether that's true or not, and what the impact of that would be.
We hope it's that easy.
Yeah.
Suspect it's not.
I would agree. But how does that translate into prices? I'm not sure. Obviously, there's a lot of focus on the Middle East because it is the source of so much of the world's energy. The Red Sea, obviously, a major trade route, especially important to Europe. And this is going to increase costs and increase supply chain costs, which are now only normalizing, according to companies we're hearing on Q4 earnings calls.
Hey, Chris, thanks for being with us this morning. Appreciate it. Chris Marangi there of Gabelli Funds. Just want to check in on shares of Netflix in the pre-market, higher by something like 9 to 10% through most of this morning, following some blowout numbers. We're up by 9.9%. Plenty of reaction on the street here, Bramo. Mark Mahaney of Evercore saying 4Q profits were materially better than already high expectations, outperforming the stock. Price target 600 from 500. We're at 540.80 this morning.
The secret is that people are going to pay rather than have the service stripped away from them. And to me, that has been basically the unknown. A lot of people thought there would be a lot of cancellations with the password crackdowns. It turns out people might be unhappy. A Jonathan Farrow, who has to pay for 15 different services and struggle to find anything, might gripe about it, but they're still paying for it. And that's ultimately what they're cashing in on.
Yeah, there's three types of consumers. People who don't want to touch any of this, people who sign up, then sign back out, people like me, the idiots that provide all the money to them, who sign up for the services, then forget about them, never cancel, and use them maybe once a quarter.
I hate this. I hate signing up for a service because I feel like I'm wedded to it. I feel like there's no way I'm going to actually have the patience or time to go find exactly how to cancel it, and I think they're banking on that.
I signed up for Paramount just to watch the Italian football. I can't remember the last time I watched a game on there.
I also signed out for Paramount because Juventus was playing, and Jonathan called me and said, this is worth the whatever fee it was, and I still haven't canceled it.
And you're still signed up and paying for the service.
You should actually be paying for that.
Yeah,
I should take royalties from Paramount.
100%.
That's what should be happening here. Coming up on the program, tech earnings underway with Tesla and IBM reporting after the bell. From New York City this morning, good morning. You're watching Bloomberg Surveillance.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bank
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX. Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.